there care about Bitcoin. A much higher percentage than ever. You guys like my monologue there for a little bit?
Yeah, man, I'm impressed. So I feel a little rugged. Pomp did not tell me that I was coming to speak at a conference. He said he was hosting a funeral for Bitcoin.
Well, that's what they all think, is that I'm like somehow bearish. Not at all. Let's do this. Phong, let's start with you maybe. I think when people look at strategy, they would say you guys are the pioneer of putting Bitcoin on the balance sheet of a publicly traded company. And I think early on, the pitch was we're going to accretively acquire more Bitcoin. You guys have gone through, I think, a very positive evolution in terms of how do you get more capital to buy more Bitcoin. And so how do you describe today maybe the strategy complex and the way that you guys are approaching this accretive acquisition of Bitcoin?
Thanks for having us. Thanks, everyone, for joining. 3 phases of the company. 2020, we took $600 million or so, invested in Bitcoin, and I would call that a Bitcoin holding company. And that's pretty much what we did. Not much different than an iBit today. We just bought and held Bitcoin. Second phase really started beginning of 2021, is we decided to lever up, and we became a Bitcoin treasury company. And the leverage was primarily through convertible notes. We dabbled a little bit in some secured loans. We even dabbled in a Bitcoin-backed loan with Silvergate, but primarily raised, at this point in time, about $12 billion in convertible notes. 0% interest on average, up 50%. Pretty successful. Those who work in the convertible complex realize that it's about 50 dudes with like PhDs or Harvard MBAs who sit across the table. They buy your converts, they short your stock. It's over the counter, which means that a retail investor can't buy a convertible note. And it's sort of a quick dopamine hit, and we're able to buy a lot of Bitcoin. But at some point in time, you have maturity risk, right? You're going to have the convertible notes come due. Not bad for an early Bitcoin treasury company or somebody who's just getting into the space, who's trying to raise funds to buy Bitcoin. But for what we're trying to build, wasn't long-term the right move. Phase 3 last year was digital credit. Became a Bitcoin credit company. And what we did is we raised about $7 billion of perpetual preferreds. And those who invest in preferreds, it's a pretty small space. Primarily banks provide preferreds. People call them hybrids between equity and debt, but it's really an equity instrument, meaning we don't have to pay it back ever because it's perpetual in nature. And it trades on the NASDAQ, so STRC trades 150 million bucks a day. And that was the eureka moment where we said, if you want to match something like Bitcoin, which has long duration, high volatility, we need to provide to the market a short duration, low volatility product. That's what STRC is. That was phase 3. Learned along the way, a lot of invention along the way. But Michael said it, Stretch is our iPhone moment. It's today is trading at like 99.70. Strive has done something with their SATA product. This is the future. This is the future for people who don't want the volatility of Bitcoin, but they want access to the underlying returns. They buy Stretch. I met somebody out there. They're buying the product. So constant innovation and Stretch is going to be the big thing.
Describe just real quick on this digital credit with Stretch. People will see the yield number. It's much higher than treasuries, et cetera. Maybe unpack a little bit like the plumbing in terms of how are you guys paying that yield, and then certain investors buy Bitcoin versus buy Stretch, and how you guys think about maybe the two different cohorts of who are buying these different assets.
Yeah, so those who want to buy Bitcoin, they want, first of all, I'd recommend long duration investors, right? Like if you're buying Bitcoin to get the immediate pump and you want to sell it in 2 weeks, look, you can be a gambler, you could be a trader, whatever it is you want to be. I wouldn't recommend that. If you want to buy Bitcoin, you have to have long duration, call it 4 or 5 years. It's a 40 ARR product that has 40 vol, right? If you want amplified Bitcoin, then you might buy our common, MSTR. right? Which is now an 80 ARR, 80 vol or something in that range product. That's cool, right? Like if Bitcoin's not enough for you, you might buy our common equity. Great. If you want something that steps down but gives the return profile of Bitcoin, right? Everybody loves Bitcoin in this room, I assume, right? But you're not up for that level of ARR and vol, then you buy Stretch. So what is Stretch? You go on to the NASDAQ, you go on to Robinhood or whatever it is, Charles Schwab or Fidelity, and you can buy STRC. It's a perpetual preferred. The way the plumbing works is we pay 11%, now it's 11.25%, cash, monthly, returns, tax deferred if you never sell the underlying, right? It's 5x over collateralized by Bitcoin. There's no product out there like that, right? What's the equivalent if you want something paying income on a monthly basis, dividends on a monthly basis? Well, you can buy a money market. You might want to dabble in corporate bonds, long duration treasuries, but you're talking about 3, 4, 5%. There's nothing like that. You want to get up to like 11% returns. You buy a preferred for a Greek bank. You might get 11% returns, but it's not 5x over collateralized. How do we pay the dividend? We pay the dividend by issuing MSTR equity at a premium to net asset value, which is accretive to our common shareholders. You're like, well, you do that already to buy Bitcoin. Yes, that's true. But if we do that to pay dividends on a product that has $1 billion and we pay 10% dividends, it's actually more accretive to everybody. That's how we create amplification. I know it gets a little financy, wonky, but this is Bitcoin Investor Week. You're all investors. It's good that you understand the underlying product you're buying, but there's nothing like that out there. Really, there's nothing. And it's, when we IPO'd this last year, Stretch, it was $2.5 billion, largest IPO of the year at that point in time. And we went through, Morgan Stanley was the lead left. They distributed $250 million of this to their wealth management channel. Morgan Stanley is the largest wirehouse wealth manager in terms of assets of anybody out there. So it's a legitimate, exciting product.
David, I think that your career is very simultaneous to Bitcoin, right? If you think that the first time you and I met, you had the Bitcoin conference, and you and I probably looked alike. We both had on T-shirts. We were running around having a blast. Now we're sitting up here with suits and ties on. And I think Bitcoin...
Wearing the costume.
Yeah, and Bitcoin has kind of graduated or grown up through the last 10, 15 years. Talk a little bit about, you, I think, really have a great pulse on the hardcore Bitcoiner that has been coming to the Bitcoin conference year after year after year. You today have a public company as well. And so there's kind of this, some would say paradox, I would say, complementary component of there are still those hardcore Bitcoiners that are there that maybe not even like the Wall Street stuff, right? But obviously there are plenty of people who work inside of these organizations, whether it's me, you, Fong, et cetera, go and talk to these funds. And it's like, I always tell a story. I got on a call one time on a Zoom call and the analyst had a Bitcoin, Zoom background. And I was like, I got it, right? So talk about maybe, Bitcoin's kind of graduation to the stage that it's at today and how you've kind of navigated this as an entrepreneur.
It's interesting. It's changed a lot. And, even in the past couple of years, the new investors that are coming in are primarily coming in through the TradFi system and Rails. And they know a lot less about Bitcoin, the technology, the network, et cetera, which I do have a little bit of concern maybe about how successful Wall Street has been at taking those flows and kind of putting it in its own box. For me, I agree with you. I mean, it is a little bit of a juxtaposition from 2012 down with the banks to running a public company. When I've looked back over time, though, like the underlying driving passion of the entrepreneurs that were building Bitcoin was about making Bitcoin real. And, there was no reality where making Bitcoin real meant that companies and corporations wouldn't own Bitcoin. Like if Bitcoin's going to become real, all parts of the economy, all economic actors have to be brought into the Bitcoin ecosystem, into the Bitcoin financial system. And so, Nakamoto, ProCap, it's really about taking Bitcoin to the market and kind of forcing the TradFi world to acknowledge and embrace and trade with or against or whatever. It's just like you cannot like us, but you can't really ignore us. And Bitcoin just keeps leveling up through that process. So right now it's public companies, but maybe 4 years from now we'll be launching our own countries and competing on that scale. So yeah.
Fong, one of the things that people have been very interested in is monetary policy, just in the economy in general. I do think that there has been a connection between monetary policy and Bitcoin over the years, but I do think it is a little weird right now. Like we're cutting rates into high GDP growth, stocks hitting all-time highs, Bitcoin going down. How much do you guys pay attention to maybe what like a macro investor would be paying attention to versus from the outside people are just like, they're crazy. They just buy Bitcoin every week. They don't give a shit, what's going on with Fed policy.
What's cool about Bitcoin is it converges old strategy, MicroStrategy, which is a software company, and new strategy, which is much more interested in Bitcoin as a long-term store of value. And Bitcoin has this it plays two roles. It's a long-term store of value, which is very impacted by monetary policy. And in the short term, it trades like a speculative tech stock, right? Which MicroStrategy has been in the past. So when you see software companies go down, Bitcoin goes down. When you see expansionary monetary policy, maybe Bitcoin goes up. All that said, we don't sit around and stare at economic indicators. We stare at ratios that determine if we issue equity or we issue preferreds, like is it accretive? That's it. That's basically what we look at, and like every second of every day we're staring at that. But it's like a whirlwind trying to figure out what our government, let alone all the other governments around the world, are doing on monetary policy. So no, we're like that's long term. Short term, it's really just about how our stock trades versus how Bitcoin trades.
The maybe $1 trillion question: when would you guys sell the Bitcoin, if ever?
We're not selling our Bitcoin.
I thought you were going to say that.
We've stated that there are circumstances, if Bitcoin trades down to $8,000 for 5 years straight, we might need to sell our Bitcoin. But I don't think anyone thinks. People ask this question. I was on Fox News yesterday. Mike was on CNBC this morning, and they're all like, well, "What happens if Bitcoin goes down 90% for 5 years?" And they when they interview Tim Cook, they're like, "What happens if Apple stock goes down 90% and sits there for 5 years?" They never ask that question. So I find it, there's still a lot of people out there antagonistic, and they want to know what's the situation in which you'll sell Bitcoin. It's like, what's the situation that Apple is going to sell to Google, right? Who asked that question, right? Not that I mind you asking that question because you're well educated, but that is the question people ask.
David, you had a very big hand in orange pilling President Trump and I think a lot of the administration. It is pretty interesting that it is not just one person. I think almost every cabinet member at some point disclosed either they liked Bitcoin, they owned Bitcoin, et cetera. Talk about that process and the importance of the administration being so supportive of Bitcoin.
Well, first off, I would say going back to the question about how has the industry changed over time. It's like we hate politicians. We hate the political system. That's the whole point of Bitcoin is disrupted. And here we are, deal making with political parties. I think it's the same answer of the drumbeat of Bitcoin becoming real. All political parties will eventually have to integrate Bitcoin into it in the same way that being the party that stands against the internet is just not a viable position. Like if you have the position where the anti-internet party, you're not going to get elected. And so over time, all the parties will embrace Bitcoin in their own way and integrate it into their platform. One of the things that's really surprised me through this process is really, maybe it shouldn't have, but how influential specifically President Trump is and United States policy as a whole is on the world. And, when the president first embraced Bitcoin, and, we host conferences. We have one coming up in Vegas, which, by the way, all of y'all should go to if you're not planning to go to it. subtle shill. But we
what an entrepreneur.
We host a conference in Hong Kong. We host one in Abu Dhabi. We host one in Amsterdam. And so I actually get a nice flavor of perspectives from around the global community. And I kind of thought maybe when Trump got on the Bitcoin train, it'd be like a flash, and then it would kind of fade out. But as I've talked to people, it's like it's building a slow momentum, like the gears of policy just move slower. And so I would say there's actually more excitement about Trump and what he's going to do now when I go internationally than there was even, a year ago. I think though, like one thing we can't get carried away with, and I am deeply loyal to the president for everything he's done for our industry, for everything he's done for Ross Ulbricht, for a lot of causes that he's championed for us. That's the first politician that's ever, championed our worldview. But at the end of the day, liking Bitcoin is not enough. Like people, I keep reading this commentary like, oh, well, all the regulatory barriers have been swept away. There's nothing preventing Bitcoin from, reaching $1 million of Bitcoin. Well, just because you like Bitcoin doesn't mean that you've invested the political capital necessary for things to happen. And so, we're sitting here a year later. The Strategic Bitcoin Reserve was signed into an executive order. Last I've checked, we still don't even know how much Bitcoin we have exactly. And so unless you're willing to bring to bear the political capital necessary to mobilize all the different gears of government necessary to move the ball forward, then at the end of the day, it's like you can like Bitcoin, you cannot like Bitcoin, you're going to get the same outcome achieved. So I think the Trump administration was a very important first step, but there is so much further for us to go, and not just in talk, but in actual delivery and substance. And so I'm bullish, I think, on what we can accomplish in this administration. But if we really want the progress to continue, we need more people to own Bitcoin every year. We need more voters to own Bitcoin every year. And then it's just an inevitability, whether it's 4 years from now or 10 years from now or 20 years from now, we will get to the point where we actually have a government that is conducive to the rules we need for Bitcoin to be successful. And Bitcoin, let me pause there. Bitcoin will be successful with or without the government. So it's not like that we need the government to cater to us for Bitcoin to be successful. The government's realizing it's in their own best interest to work with us. And so that's really what we want is a willing dance partner on the other side to make rational, sound policy decisions that's in the United States' strategic interest.
Phong, you guys are the pioneer of this, put Bitcoin on the balance sheet. There's a lot of people who followed, good or bad. And I think maybe what is unique is that I see you, Michael, many other people at Strategy continue to be supporters and even to a degree bring awareness to a lot of these other folks. Why do you guys do that? I think a lot of people would say, hey, they're competition, and you could easily just ignore them and try to go and take the whole market.
I think it's very early for Bitcoin. And, when I'm not talking about Strategy or Bitcoin treasury companies, I'm meeting with friends, family, and telling everybody you can about Bitcoin. I know you guys are too. So I'll start with that. It's still very much an education process that needs to occur. The great thing I love about Bitcoin, the ethos is Bitcoin, is it's not like you have more coins than I do, therefore you won. Or, my enemy has Bitcoin, therefore I shouldn't. It's an everybody wins ethos. Everybody helps, everybody educates. It's, back to the technology world. Technology works best when it's open source. A good financial strategy works best when it's open source. So the more Bitcoin treasury companies, the better. And you guys are leading Bitcoin treasury companies. Thank you very much. But
we're getting our ass kicked, to be honest. Pomp, it's been ugly.
Well, I was going to ask you, what does it feel like?
Well, first off, it sucks, to be down a lot of money.
Fong's like, yeah, we don't have that problem.
Yeah. No, so one thing you said, there is no MicroStrategy competitor. Like, all of the other treasury companies that exist, there are so many strengths that Strategy has that you can't fully appreciate or recognize until you're in a similar chair and you're trying to make the same decision and you're like, oh wait, we can't make that decision because we don't have that strength or lever that Strategy has. They have a fantastic cap table. They have a very liquid stock. They have a lot of optionality that I think is really unique to MicroStrategy, and like I wish we could do what MicroStrategy could do. In terms of like how is it, having a stock that's down 75% from our pipe price? I was hoping we would be making $50 million a day when we launched the stock, not losing $50 million a day. So it's painful, but at the same time, I've been here before 4 or 5 times. I mean, I've been in Bitcoin since 2012. I've been through 5 Bitcoin winters. As painful as this process is, it's nothing compared to what we've lived through before in the past. It's like, we're upset about a 30% drawdown or 40% drawdown in the price of Bitcoin. Back in the day, we used to have 50% drawdowns in the price of Bitcoin in 6 hours. Okay, it's like a whole nother world of crazy. So the key thing is survival. The key thing is, a bear market for a treasury company like ours can always get worse. And so you always have to have the mindset that you're playing a long game. And, to Fong's point, Bitcoin is very early. Bitcoin's going to be incredibly successful. The key thing is to make sure that you're there when Bitcoin is successful and you're not in the tombstone and you're not around to see the dividends of the fruit of what we've planted. And so, I think for us, we have to chart a different way than strategy did. Congratulations, I saw the news today. You closed the deal. How painful was that process?
I do not recommend doing a related party transaction. Yeah, it's not fun.
Are we going to interview Pomp now?
Yeah.
I do feel like I'm getting grilled at the moment.
Well, no, it's funny too because Saylor will always say like imminate hell. You don't want to do that, and it's like
he's not wrong.
He's not wrong. That's again. It's so many times I find myself.
Well, that's a good question, actually, Fong. You ever seen on the internet people say the worst words in tech or Balaji was right? I feel like in Bitcoin, Michael was right gets said a lot. Do you say that a lot internally?
Michael and I have our fair share of one-sided debates. What I would say, though, the thing is, look, I've been a public company officer for 10 years, 11 years. Mike's been a public company board member and CEO since 1998. And you guys are wading into the world of being, public companies, or you're now deep in the world of being a public company. It's a responsibility to your shareholders that we have entrenched in us collectively of 40 years of experience. And, for those out there who are shareholders of Strategy, who own MSTR, NER preferreds, it's a hard job when you have 5 million folks out there who own your shares in some way, shape, or form. And it's a responsibility. And so it's in that way, it's a lot different than owning Bitcoin, running a public company. And Mike and I do not take it lightly. We talk every day about the capital markets decisions we're making. Once in the morning, once at the end of the day to recap. Mostly one-sided conversations, but it's a big deal, and for those who are becoming Bitcoin treasury companies or are, I wish you all the success. And it's a lot of it takes some fortitude, even more so than owning Bitcoin does.
Yeah, and I think there's the capital formation piece of this, which I think there's really no company in the world better than MicroStrategy at. There's the capital allocation piece of this and balance sheet strategy, which, there's a lot of things that if you listen to all the podcasts, you're like, oh, okay, that makes sense, like durability or, there's certain attributes you may want in your balance sheet. But until you're actually holding a balance sheet of that size, you really actually don't spend very much time thinking about what attributes do I want in my balance sheet. And so there's a lot of appreciation that you have for certain elements that you only get once you're in the battlefield and you're like living the experience. And then I think one thing that's a little bit different and how companies are gonna have to find their own way is like, we're gonna have an operating business. We're in the process of completing a merger with the company I've been building the past 13 years, BTC Inc., which owns the conferences and Bitcoin Magazine, and UTXO, which is our asset manager. And so that's going to be something a little bit different about our company. And like Pomp, you now have an AI company. Like, so each of these treasury companies, they're going to be put in a position, if they don't have the inherent strengths that Strategy has, how can they create value and differentiate themselves so that they have a compelling thesis for why you should buy that stock and not just put everything into Strategy, which frankly, putting everything into Strategy is a pretty damn good plan. So, I think that story's playing out. There's a lot of capital that's gone into DATs, which I hate the term DATs, but whatever. There's a lot of capital that's gone into DATs. I think half those companies are going to disappear over the next 18 months. I think there's going to be a lot of consolidation that's going to occur. And then I think the other half that sticks around, they're going to have to do more than just sit on a pile of coins. And so I think you're going to see a lot of operating companies get acquired. I think, not just in Bitcoin, but throughout the crypto landscape. And we're going to see which models work. And I think one thing that our industry has always been very good at is copying good ideas. And so, if people start doing differentiated things that are successful, people will quickly follow behind. The stretch has been incredibly successful. You've seen SATA. I know there are many treasury companies that are very interested in doing their own preferred if they can get to the scale. I mean, is that something that y'all have talked about? I'm sure.
No.
No.
We're going to take a different path.
Okay. Well, there you go.
Listen,
different path. I like it.
I'm not smarter than these guys, so I'll let them. Those capital market calls twice a day, I'm good. They're going to outbeat me every day. Sometimes you got to know what games to play and what games not to play. Right?
Exactly. So anyway, I don't even remember the original question, but
it's all right. I'm getting yelled at that we got to go. But I appreciate both of you guys coming up here. Phong, I'll leave you the last word. What's kind of your word to the Bitcoiners during a bear market?
If you don't have the stomach for the bear market of Bitcoin, then I would not suggest you buy Bitcoin. You should buy Stretch, right? and if we're going to show products here, right, like buy the product that has Bitcoin behind it. That's not volatile and gives you 11%. That's why we created that product.
Incredible. All right, thank you guys. All right, Matt from ABTC is going to come up here next. You get your pick of which seat. You want that one? All right. What is American Bitcoin?
Where to begin? So American Bitcoin, aside from being obviously what we do every day here in the U.S., for American Bitcoin, the company, we are a Bitcoin accumulator. So what does that mean? We mine Bitcoin, so what we call our layer one. We secure the network. We produce maybe 8 to 10 Bitcoin per day every day. We have a treasury component, so that's our capital markets engine, somewhat like what was being described here on stage before. That's our layer 2. And we are now building out what we call layer 3, which is our ecosystem lens, which is to the mission of making Bitcoin actually get adopted, because we're putting a lot of work into securing this network, into accumulating as much as possible. But without that widespread adoption, what is it all for? So really, in a nutshell, ABTC is this engine towards accelerating Bitcoin. We're co-founded with Eric Trump. He's our chief strategy officer. He's pretty involved with the company as well day to day. That's provided a really nice sort of beachhead for us to make our name in the space. And we're really, frankly, just excited to be rising up the ranks every day.
Now, you mentioned mining. And what I find interesting is there's a lot of Bitcoin miners who said, hey, you know what, this has been great. We're going to go on a different ride. We're going to go and become a high-performance compute business. We're going to go into the AI sector. You all have been very steady in, hey, we're going to stay in Bitcoin. We think that we can produce the Bitcoin at a lower cost than what it's currently trading at. Describe a little bit as to why do you guys have so much conviction doing that? And then what are the challenges in the Bitcoin market as a miner today?
Absolutely. So this was a tremendous opportunity for us. We launched the company April 1. We carved out the mining assets from HUD 8, which some of you may be familiar with. And when we started this adventure, we didn't really envision that our competitors would all bail or pivot, which to me really created a vacuum in the market for that pure play Bitcoin miner to actually emerge. If you were to look at a lot of the public tickers today of the major miners, so many of them have announced AI deals or the intent to go into AI that it's actually quite hard to gain any exposure to Bitcoin security or to Bitcoin hash rate. So right off the bat, we really have started to have the field more or less to ourselves. Now, why would we want it in the first place? So I started my career at Bain & Company, and the attitude there was always strategy came down to where to play and how to win. And for us, mining is this integral part of the Bitcoin ecosystem. You can do a lot of things in the capital markets, but Bitcoin does not have native yield. This is not something like Ethereum or Solana. You can't stake it, et cetera. If you want yield on Bitcoin, typically you got to work for it with proof of work. And so having a mining business as our base layer provides that day-to-day steady drip of Bitcoin accumulation, provides a means for us to blend down the cost of the purchases that we make alongside the other treasury companies, and really gives us a story to tell the markets to get excited about.
Now, when you guys mine the Bitcoin, there's plenty of miners who have said, hey, we're going to mine Bitcoin and we're going to sell it. There's others who say we're going to mine it and hold it. We're going to mine it, hold it, and then make it productive. How do you guys make the trade-off decisions of once that Bitcoin is mined and it's on your balance sheet, what to do with it?
So mining it, step one. Holding it, step two. Safe, custody, et cetera. It's going to be activating it. That's a really interesting point for us. So with the mining, at a minimum, we're blending down the cost. So we run what's called an ATM, like many of our peers, where we're out there buying Bitcoin. But if you're buying Bitcoin at spot, you're really just getting the market price. There's no real way to beat that. So for us to have the mining business, we're able to kind of drip that price down over time, blend down the cost of that stack. Now, once it's in the stack, I think we're faced with the same interesting problem set that many of our peers are, which is what can you do with it? Right now, Bitcoin is somewhat analogous to the gold in Fort Knox. It's not really doing anything. We are certainly interested in finding ways to activate that stack. I think we're actually at a really interesting sort of juncture in the ecosystem for Bitcoin overall, where those opportunities are coming online. I think there are a lot of companies that are here today that are all about trying to find ways to generate responsible forms of yield through different financial instruments, et cetera. I also think to that layer 3 story I was talking about, that in the DeFi world, there's a lot of things that are coming up there as well, and we should see a big proliferation of Bitcoin-related products in 2026.
What are those types of products?
Sure. So the easiest are going to be the financial primitives. So you start with the sort of the loaning, the margins, people doing perps funding. There's some interesting sort of ties in on private credit and things like that. Bitcoin represents this nice store of value. And for a lot of companies, it would be great to actually use that fortress balance sheet that they're building. I think we have a fortress balance sheet. I think you're also building kind of a formidable Bitcoin stack. And so I look at these DeFi products as something that we could implement or take part in, similar to how we would approach some of these more traditional financial institutions that also want access to the stack.
Now, one of the things I find very interesting about your all's business is you do have Eric Trump as the chief strategy officer. He brings quite a bit of retail attention to a stock. Liquidity is important when you're running an ATM, et cetera. How do you all think about the capital tools that are available to you, right? If you've got a strong balance sheet, if you've got the ATM that's there, if you've got liquidity in the stock, you have a lot more options than maybe a traditional company who doesn't have that attention and liquidity. How do you think about funding the business? Or would you guys ever do a preferred? Or how do you think about kind of these different components?
We've got these many components that give us this dimensional approach to the Bitcoin story, but how you wire that together, that narrative, that is as important. And to your point, for any business, especially when you're a public company, you need to be able to articulate to the market why you. And in a world where folks can buy spot Bitcoin, it's easier than ever, frankly. They can buy ETFs, there's IBIT, et cetera. There are the DATs. I know Dave doesn't like the word DATs, but there are these treasury vehicles. And now, interestingly, there are some income-generating ETFs. So there is a menu of options for folks that want exposure to Bitcoin. So for us, how do we differentiate ourselves, and what is that exposure that we're giving above and beyond just buying spot? And what we offer is, again, this multi-part story. And with Eric able to articulate that to the markets, it gives us more of a, I would say, maybe a grounding in what we're doing and the level of conviction we have than our maybe some of our peer set, right? You kind of started the conversation asking about why are all your mining peers bailing? There's an old quote that in adversity, man is introduced to himself. And I think we've started to see some of our peers face adversity, and they're being introduced themselves, and they're going in a different direction than they might have initially stated.
Now, in the mining business, there are really two inputs. There's electricity, and then there is the hardware that you have to acquire. If we start with electricity, there is headline after headline of how little electricity we have for all the AI data centers and capacity. How's that affecting you guys? Is there things that you've done to kind of mitigate that risk, or are there things that you guys think about internally on electricity capacity?
American energy policy, I think, has never been this sexy. And you're starting to see these conversations, whether it's the AI folks, the Bitcoin folks, the climate folks, et cetera. Energy's cool. Now, I live in Texas, and so energy has been small talk for us since the winter storm a few years ago. This is something that I think remains very salient. There are 50 states, so there are sort of 50 laboratories for energy policy on top of the federal policy. This is an opportunity for miners to play a role in that energy strategy for the United States overall. To your point, there are a lot more folks going after the electron today than there were 3-5 years ago, but not all energy opportunities are created equally. There are sites that, like the Meta site, Hyperion in Louisiana. Hut 8 has a marquee site in Louisiana as well. Those are fantastic. Those are probably right for AI. When it comes to Bitcoin, we have a level of agility and nimbleness that our AI brethren don't when it comes to the energy story. So whether we act as the vanguard for sites that have potential, but they don't have the fiber redundancy, they don't have the power redundancy that AI hyperscalers would demand, or whether we go smaller into some of these flared opportunities, et cetera. Bitcoin is a fun one because it just rewards that agility. It rewards the ability to find that energy gap between the price of the electron and the price of Bitcoin and ruthlessly scale into that.
Tariffs have been a huge thing. Hardware is usually manufactured outside the United States. How are you guys dealing with that?
As the aphorism goes, hardware is hard, and unfortunately, mining is not done in the metaverse. So we do import quite a bit of machinery from around the world. There are several American machine manufacturers. There are several foreign manufacturers that are looking to bring manufacturing to the United States. The tariff policies are things that we're dealing with, the same as every one of our peers. I know with the name American Bitcoin, you obviously can tell that we want to do everything we can to keep mining here in the United States. And when we've had meetings with policymakers and related folks, it's been made very clear to them that, for me, the priority is the hash rate. And if we can have a good plurality of the hash rate here in the United States, then that goes a long way towards securing the network for Bitcoin and ensuring that Bitcoin remains a strategic asset. Obviously, you mentioned earlier the Bitcoin Strategic Reserve is underway. Counting the Bitcoin has proven to be a somewhat arduous challenge for the federal government, but they're working on that. And we see the United States now starting to treat Bitcoin at the federal level as a pretty important asset. And then at the state level, Texas obviously moving onto a Bitcoin reserve is something that they're working towards. There's a few other states. I'd give credit to Dennis Porter and some of the policy and gov affairs focused folks for really starting to advocate for that. And I frankly think it's a tremendous time for Bitcoin to be growing here in the U.S.
Now, when you think about mining as a business, one of the aspects that I think is very interesting is there's this driving down of the cost because of innovation. We see this in AI happening, nonstop. If I go back and I think about, the original S9s compared to the technology today,
right.
There is liquid immersion cooling. There's all these kind of new things that have come to market. How do you all think about, okay, technology is actually going to drive down our cost versus it is just a pure operational excellence and being able to operate these facilities well is actually the competitive advantage?
Innovation is fast, but diffusion is slow. And what I mean by that is that the S9, sort of the toaster box modality for Bitcoin mining, lasted a very long time. Even into more recent years, you could still buy what was effectively a large-scale toaster box that was designed for your basement, and we simply were scaling that up in enormous facilities around Texas and the United States. Where I see that going for us with these innovations is while things are continuing to grow and change, the industry doesn't actually move that quickly. So I'll use an example: liquid immersion. Whether it's direct-to-chip cooling or putting chips in effectively a bathtub, this was something that was sort of blueprinted out maybe half a decade ago, but we didn't all move into that immediately. It was something that took time. We wanted to test it out. There were early movers. Some of them were rewarded for moving quickly. Some of them were frankly punished. The joke that the early bird gets the worm, but the second mouse gets the cheese. There were a few folks that really went headlong into the immersion thing, only to realize that to do immersion to properly, you have to master both electricity and plumbing. It's a very tough Venn diagram at scale. So I think I read the same headlines you do about the innovations, and I think that AI is increasing the velocity of innovation, but AI is not necessarily increasing the velocity of diffusion, especially in hardware. So that gives us time to really think through all of these sort of menu items of ideas that are coming to us and figure out strategically which ones fit our business model and how can we use them to have that operational discipline you were referencing.
When we think about vertical integration, obviously owning the facility, owning the machines, you could start to eat back into that stack and start to own everything from the electricity, the connections, even maybe the power production. How have you guys approached this, and will that evolve over time in terms of how vertically integrated you actually want to be with the kind of power production?
We have chosen to avoid vertical integration at American Bitcoin. This separates us from our peer group for what it is. So even at Hut 8, sort of the prior company, the parent co, Hut 8 had a very heavy stock ticker. And what I mean by that is that when the stock price moved, it could be natural gas, it could be the price of Bitcoin, it could be an AI trade. It was very complicated to know what was moving what. When we pulled out ABTC into a standalone category leader in Bitcoin, it gave the market a lot more clarity into what we were offering. Now, to do that right, my view was we want the business to have lemonade stand economics. So for American Bitcoin, the money effectively is only going into buying Bitcoin or to buying hash rate. Putting money into transformers, substations, flower beds, whatever, that to me was not the highest and best use of capital for a hash rate Bitcoin company. Now, there are other folks with a different ethos. They want to kind of control the entire supply chain. As I think Bezos said, your margin is my opportunity. What I've noticed, though, is there's been such a Cambrian explosion of manufacturers and such an explosion of pools and such an explosion of custodians that I'm very happy to let them compete and work as sort of a networker, as a central node in the ecosystem that is really working with what we believe to be best-in-class counterparties in the industry, taking that, packaging it into something that an investor can get excited about, and then bringing that to the market.
Now, when you think about that vertical integration, does it change the unit economics by not being vertically integrated, and that trade-off is worth it? Or like, what are you giving up by not going back into the substations?
Excellent question. So when you, what do you get when you don't put money into substation? Well, you get more money in theory. So if you're leasing the substation or you're doing pass-throughs with a partner, et cetera, it's freeing up capital to put money into things that we believe actually drive returns in our business, which are Bitcoin and hash rate. And so when I go out to our investors and when I meet with our board to talk about strategy, the goal is maximizing Bitcoin per share. I can articulate a story for why the Bitcoin accumulation strategy does that. I can articulate a story for why the mining business does that. It is harder for me to articulate why vertically integrating all the way down the stack necessarily results in higher Bitcoin per share. It certainly can. So I'm not discounting some of the choices that our peers have made to actually try and own the entire pie. I just know that from a coordination cost perspective and from a cost of capital of what you're not getting by spending money on transformers, it's actually quite expensive.
Now, when we think about the economic environment right now, I think that there's been a lot of deregulation. There's obviously tax cuts. There's tariffs. We're weakening the U.S. dollar, kind of this entire economic plan that's being put in there. Are there any things from a macro standpoint, economic policy or a monetary policy that is affecting your business outside of the tariffs?
Yeah, a few years ago when the Ukraine war started, I was in D.C. It was right during the Operation Choke Point that they were denying was even taking place. And some of the policy folks were asking me what I was tracking and what headlines I was really reading about to navigate our business. And they were expecting me to talk about Operation Choke Point or banking or licenses, et cetera. Actually, that was not the case. I was most interested in the front in Ukraine and where that was going, because that was having a knock-on effect into natural gas, which was having a knock-on effect into what was the single largest driver of our business. So tying back to your original question, the macro environment's multivariate, right? I think we need to keep an eye on things like, the carry trade with Japan and, what's going on with Iran and things like that. And you could spend all day reading the news and trying to tie it into your business, and it's helpful, but you really can't get lost in the sauce. And so for us, we genuinely do spend a lot of time focused on the return on invested capital in those machines or into the other financial strategies that we're running. I mean, it's good to know, an outlook on the Fed and if they're going to raise rates and if they're going to lower rates. And, I think it will have an implication on our stack, but we need to be sort of an all-weather company. And so in every situation, I'm going to wish I had operational discipline. And so that's where we put the focus.
Now, what I find maybe interesting is one of the advantages that the mining industry has really hung its hat on is this whole idea of stabilizing the grid. And so a lot of these miners have said, hey, listen, we are going to, at certain times, sell the energy back to the grid. We're kind of good community members, but also it's economically attractive for us to do this. I think that is a big reason why hash rate fell, 40-ish% when the entire country got cold a couple of weeks ago. And so talk about this kind of balance between there's an economic, kind of individual mandate for each one of these companies. But if hash rate drops 40%, is that a good thing, a bad thing? Should we be agnostic to it?
Yeah, let's pull that apart into two questions. So one is how do we feel about Bitcoin and the implication on energy prices? And then the other will be centralization of hash rate. So when it comes to Bitcoin and the role that it plays with energy trading, again, living in Texas, our price of power changes every 5 minutes. So it's you're rewarded for working with the market. When prices spike, folks will ask me, are you running? Are you using all the energy? We're actually one of the first companies that you would expect to turn off. Maybe not the first, but we don't want to be competing with the air conditioning, the bakery for power prices. For us, we run at such a low price of power that if it's going to start to spike, we're already dialing back, which actually helps, to your point, stabilize power prices overall in Texas. Now, outside of Texas and other markets where it's a bit more regulated, it's more complicated. There are utilities where there are agreements in place with hedges, et cetera. So we are just one player in their network, but as long as you're being a good partner and you're being very attendant to making sure that your load is reliable, you're not dropping, you're not changing frequency, et cetera, it's a pretty good relationship, and the utilities welcome that kind of firm yet flexible load that Bitcoin provides. To the bit about hash rate, yeah, we are getting to a point where when there's a deep freeze across the United States, you can actually see it in the tape in hash power moving around in network difficulty. Is that good? I think as an American, I think that's pretty good because, maybe 7 or 8 years ago, it was actually floods in Sichuan. You would see when it was rainy season in southwest China, the machines would come offline because they would actually move them to higher ground, and it was a whole thing. That did not make me feel good as an American to see the hash rate being so implicated or impacted from the Chinese miners. So, in the micro, I'm happy. In the macro, I would love to see more decentralization of the grid. I mean, even just outside of Texas, the U.S. is a big place. There's some great power sources outside of Texas. I think for American Bitcoin, we're open for business, looking to be a part of decentralizing that hash rate. So I think in the short term, yeah, you'll probably continue to see some spikes and chops during the freezes, but long term, the Bitcoin story will continue to diffuse.
What's your pitch to investors who are interested in learning about the business? When you describe to them, hey, this is what American Bitcoin stands for, this is what we're doing.
If you want disciplined, focused Bitcoin network exposure, I believe we are a fantastic opportunity to explore. We have the mining business. That's a steady accumulator. We have the treasury angle, so we're continuing to hoard and accumulate Bitcoin like some of our peers here today. And increasingly, we're going to spend time on this ecosystem layer and try and find additional ways to pull value and create and capture value from the Bitcoin ecosystem. And I could not be more excited to share that with investors.
Amazing. Matt, thank you so much for taking the time to do this.
Thank you very much.
All right, next up we have Jeb Henzerling. I got a lot of questions for him because I don't know anything about regulation, so he's going to come up here and educate us. Good to see you. All right, so before we have this conversation, I got to tell you guys a little bit of background on Jeb, because whenever somebody starts talking about regulation at a Bitcoin conference, you immediately wonder, do they come out of their mom's basement and start talking about this stuff, or do they actually know what they're talking about? So, Jeb, you tell me if I get all this right, but you were a 3-time former chairman of the House Financial Services Committee.
So far, so good.
Okay. You were the vice chairman of the global bank UBS.
Yes.
Okay. And you also were the economics fellow at Cato Institute.
3 for 3.
All right. And you also happen to be an advisor at ProCap Financial, which, we put as a footnote at the bottom of that illustrious
My most
career.
important credential.
All right. Regulation, nobody cared a decade ago. I can't go anywhere and talk to people about Bitcoin without them all caring, almost to the point where they care too much at this point. how do you look at the regulatory environment, knowing how the rules actually get made and how the process and all the things that go into this stuff? What's your kind of general take on where we are from a regulation standpoint in Washington, D.C. when it comes to Bitcoin and maybe the broader crypto industry?
Well, to kind of riff off of your observation, people ignore Washington at their own peril. A semicolon here, a comma there can really make a big difference, number one. Number two, you need to realize in politics, it's not majorities that count. It's very intense vocal minorities who are involved in the political process. And I think that the crypto community writ large, Bitcoin, has now realized this and has made up for a lot of lost time. But there's been a whole lot of pain and cost to get us to this point. So when I say this particular point, where are we? Clearly, we have the most pro-crypto president in history and will remain so. And last I looked, this administration is going to be around for at least 3 more years. But Congress is not irrelevant in this process. So many probably already know about the passage of the stablecoin bill, and now we've had the passage, at least in my old committee, the House Financial Services Committee, and the House of Representatives, the market structure bill. And now, as you probably know, it's stuck in the Senate. You can argue that Coinbase blew it up. Some accuracy to that, but number one, they weren't operating on their own. There was a lot of other big players who were behind them, but they didn't want to poke their head up. On the other hand, not unanimity in the industry. Should we gamble on losing this particular moment, and what is the cost of losing this particular moment? So as you may know, and as you may have read, there is a big battle going on between crypto and the banks. All has to do with yield. The bill, Anthony, coming out of the House was, I think maybe you used the term with respect to U.S. policy to Taiwan, strategic ambiguity. Well, the House in its bill, when it came to yield for exchanges or brokers or non-issuer yield, there was strategic ambiguity. And I think finally the banks woke up and said, oh my God, there's a back door here, and we're going to have to deal with it. So to some extent, you can argue they're relitigating what was in the Stable Act, and they're relitigating that now in Clarity Act. Now, clearly, the president wants to get this done. Congress wants to get this done. And I think today, for the second time, the negotiators from the banks and crypto were called into the principal's office. I've spoken with one of the participants who I know. The first meeting was cordial but frosty. Apparently a few more substantive conversations going on in the second meeting. Something you need to understand about kind of the political landscape here is, for those who either want to cheer what Coinbase did or jeer at what Coinbase did, you need to know this bill was not on a path to pass the United States Senate in the first place. So all the focus has been on the issue of yield. And it's a very important issue, and don't underestimate the banks. The banks have been around for a whole lot longer than crypto has been around. Every member of Congress has multiple banks in their state, in their district. There's long-established relationships there. And Washington is a relationship-driven town. So don't underestimate that, and particularly for community banks, very little capital in the economy writ large, but they punch way above their weight, way above their political weight. They consider this yield issue to be somewhere between serious and existential, okay? The larger banks, they know, wait a second, one day we may be opponents, the next day we're going to be allies. So I think the issue will ultimately be worked out, if for no other reason. On the one hand, the banks have good political ground because they're playing defense. They don't have to have this bill. crypto community, they need this bill. On the other hand, the White House has opened up a new battlefront with the banks, and that battlefront is interest caps on credit cards, a huge revenue center for the banks. And so although banks are only having to play defense on the yield issue, they're having to fight a multi-front war that crypto isn't at the moment. So I think you're likely to see something worked out possibly by early to mid-March. But if it's not worked out then, the chances start to decline with every day. And so if the yield issue gets worked out, you still have what the Democrats, I guess, are referring to as the ethics issue. So, and you may have seen something about Liberty Financial. You may have seen something about United Arab Emirates. So this is really sticking in the craw of the Democrats. And notwithstanding the fact that the crypto community has, 200 million in fair stake, and never underestimate the power of money in the body politic. But don't underestimate, again, kind of this grassroots effort within each individual party. Where is the intensity? And so right now, the Democratic progressive base are demanding that something be done with this issue before this bill advances. So the question is it simply going to be something that's kind of token, no pun intended? Is it going to be more substantive? And that's really a negotiation taking place with the White House. So I haven't given you an opportunity to ask the question. My guess is the next question is how to handicap this thing.
Well, not only that, but how would you get it done?
I'm sorry, how would I?
I said, what is the handicap on it being done? And if you were in the room, how would you get it done?
Well, I'm reminded...
Other than being a good-looking, smooth-talking, great politician.
I'm reminded of something Yogi Berra once said: predictions are dangerous, especially about the future. So you're putting me in this position. I would say right now, odds are north of 60-40 to getting this thing done. If we get past mid to late March, they start to decline. If you get up to the August recess, they drop precipitously, although still some chance in the lame duck session. So how would I get this done? Again, the president has opened up a different battlefront with the banks. And if he applies enough pressure, he will bring them to the table. I think that Secretary Bessent is opening up a front on crypto. And you need to realize, again, if this doesn't get done in this Congress, that if you have leadership flip, Elizabeth Warren is going to be chair of the Banking Committee. Okay, by any public policy standard, she is the #1 opponent of crypto in the Senate, and she still, she throws a lot of weight around. In the House, the chairmanship would go back to my former colleague, Maxine Waters of California. Not a whole lot I can say there. Besides, she cares about the housing portfolio. She doesn't care about anything else. If you don't get this bill passed for crypto and get it passed now, you may have lost that opportunity. And the CFTC, the SEC, there's a lot they can do for 3 years under the Trump administration, but they can't get it all done. And so there's going to be pressure for crypto to cut a deal. And I would point out to those guys, it's kind of now or never.
So when you say now or never, one of the things I jump to is if you're a big bank, you basically have kind of a fork in the road to choose. You can try to play a regulatory capture game and say, let me go get a bunch of rules in place where pretty much I'm the only one who could do certain things. Or you can try to compete. And given the choice, most big organizations will take the regulatory capture game all day long. But I am not missing the fact that Coinbase, Robinhood, many of these kind of fintech or neobank type businesses, they're big. right? These are not small players anymore. And so they have the resources on the legal front, on the regulatory front, to actually maybe benefit from that regulatory capture as well. And so how do you see, kind of the chessboard changing a little bit when, if there's a bunch of startups, you may actually have certain tools at your advantage that you don't have now because you kind of let these companies get too big, and so they have similar resources to, maybe some of the big banks do.
Well, again, the banks have had long-standing relationships. And again, the crypto community is catching up, but they're not there yet. And so money in the political process, very, very important. But if you ask, for example, first legislators, and legislators have a lot to do with what regulators end up doing. For example, when I was chairman of the House Financial Services Committee, I had the power of subpoena, had it in my hip pocket. You know what? In the 6 years that I was chairman of the House Financial Services Committee, no regulator on the receiving end of one of my subpoenas ever thanked me for subpoenaing him, okay? So,
shocker.
Yeah, so don't underestimate the power that the legislators have over the regulators. And don't underestimate also, Anthony, this thing could flip again. I mean, we have seen Operation Choke Point once. We have seen Gary Gensler try to own the universe. And as these battle lines get drawn, I would not say it's a foregone conclusion that regulatory capture is going to benefit any particular sector. It's going to kind of be driven from the top. It's going to, secondly, be driven by Congress. And also, I would say there is less regulatory capture, if you will, because the regulators have less power than they used to have prior to the Supreme Court case now of a couple of years ago, Loper Bright, that got rid of the Chevron doctrine. The Chevron doctrine allowed, basically put the finger of the regulators on the scales of justice so that essentially it changed the burden of persuasion. And under the Chevron doctrine, the regulators' interpretation of their enabling statute had the benefit of law, basically changed the burden of persuasion. That's gone. And so that has really kind of confined regulatory ambit, and I think there's other litigation before SCOTUS that will do it even more.
Now, when you look out from a politician's standpoint, what I think Bitcoiners believe, whether they're right or not, is that both sides of the political aisle now recognize that this is a very important constituency. They have money, they have a voice online, and you are likely not going to be successful as a politician for a long period of time being anti-crypto, Bitcoin, etc. That sounds like a good story. You mentioned one person who is pretty anti-crypto, who seems to have a lot of power. How should people think about engaging with these politicians, and what is kind of the incentive system for the politicians? Do they actually care what Bitcoiners or others are saying online?
What they're saying online only to the extent that it impacts those who control their base. For example, Anthony, let's talk about money. The average member of Congress, one, you should realize that due to, shall we call it, creative redistricting, i.e. gerrymandering, there are fewer and fewer seats in Congress that are determined in the general election. They're determined in the primary, okay? And if you talk to the average member of Congress and you said, would you rather have a 7-figure expenditure by a crypto super PAC in your district, or say you're a Republican, would you rather be endorsed by the top 4 MAGA leaders in each county? Give me the endorsement of the MAGA leaders, because the grassroots is going to matter more. It's back to that intensity. So they'd love to have the air cover of the independent expenditure of the super PAC, but it's more important. So when you say, do they care about what's going online? They care about how does that influence those who influence the base, who ultimately determine the vote. So yeah, people get it. There are 12 Democrat senators right now, easily a dozen, who desperately want to figure out a way to make this thing work. But right now, they're held back by that intense political base who wants to slap the president or kick him in the private parts on his family's investment in crypto. And until they can figure out how to navigate that, they're having a hard time going forward. And I've worked with Elizabeth Warren. I was on the TARP oversight panel after the great financial crisis. She was the chair. Working with her was not the highlight of my life, I can assure you of that. But I respect her power within the Democratic Party. And so some will say, well, this is inevitable. Well, do you want to see this infrastructure and wide-scale adoption, do you want to see that happen in 3 years, or do you want to see it happen in 12? So is it inevitable? Yeah, I believe it's inevitable. But frankly, from a perspective of an investor, and I would say more importantly as an American and one who cares about the democratization of credit and investment, we want this sooner than later. We want this clarity bill, and then there's other issues we've got to get to. We got to get to the whole taxation issue, for example. And so there's this brave new world, but we shouldn't be indifferent as to the timing and its accessibility.
Now, I think I've gotten to know you, and I know some of your backstory, but for those that don't, a politician on the House Financial Services Committee, being a Bitcoiner and an advocate for Bitcoin is not what they would have thought is the natural conclusion of your journey.
Well, I'm not sure even you know this, but I held the very first Bitcoin hearing in Congress.
I did not know that.
I probably need to add a tad of context. I think there was one, maybe two other hearings before mine saying, oh my God, look at what the criminals are going to do with crypto. Oh my God, what a threat to national security. And I said, well, maybe this has a role in our financial world. Maybe this is something that can help democratize. So, I probably didn't leave Congress with a whole lot of bragging rights, but at least I can brag on having the first hearing about crypto and Bitcoin as being the future of finance in the U.S. So, I'm a public policy guy. I'm not a tech guy. But I've cared deeply, as I've pointed out earlier, about the fact that America is the land of economic opportunity. It's what brought people here. They were seeking religious opportunity, political opportunity, economic opportunity. I believe in Joseph Schumpeter's creative destruction. And so I'm very much wanted to be in the public policy debate to enable the new thing that could help democratize credit and investing. And I figured out that was crypto. And then I figured out, well, Bitcoin has first mover advantage. And I know you've spoken a lot about our macro future, and I agree with you that right now we have to, in some respects, worry about deflation more than inflation. But at some point, it's going to be fiscal policy that drives us to an incredible level of inflation. And at that point, it's going to be important that every American have Bitcoin in their investment portfolio. I'm going to be fine. My finances are fine. The last two income streams that will ever cease in America are Social Security and congressional pensions, okay? I benefit from one, I soon will benefit from the other, and they're both indexed to inflation. So it's not going to bother me, but my children, my grandchildren, and that's why it's so important. So, Anthony, anytime my public policy proclivities can dovetail with my financial interests, I think, oh, what a great country. And so thank you for allowing me to be here. Thank you for allowing me to be a part of your company, because it's where I can do good for America and I can do well for my family.
You guys want to know why he's a great politician? All right, thank you very much, Jeb. All right, boys, you ready? Tad and Sam, let's go. Now, this conversation is going to be a little bit different. You know, I could go back and forth with Jeb all day about all kinds of things. I got no clue what these two guys are going to talk about, so they're going to give me a good education here. Tad used to be the CEO of Sotheby's, if I'm not mistaken. He's also now an expert in art. Maybe next to Sam? Sam, you got two mics there?
True.
Yeah, all right. Look,
Great.
Sam's already hogging two mics. All right. Sam, you're an artist, very talented artist. I don't know shit about art. So what I need to understand is, what does that got to do with crypto? That's what I'm trying to figure out, is how does crypto and art, because somehow now there's this massive part of the crypto industry that is tied to art.
I think that we, as people, like numbers because we can sort and get dominion and understanding over the world with numbers. But people really like stories, and they like numbers with stories. And art is one of these things that we've had forever. As long as we've been a species, we've been using the tools of the day to try to extract something out of us and leave something behind. And that's why there are things that are thousands of years old, and even all the way into the more hundreds and more recent, that we still find deeply valuable, interesting, compelling. And I think we feel that because it wasn't magically imbued with time, those thousands of years weren't baked in out of the gate. There was something true extracted by a person long ago that cycle after cycle, war after war, as everything changed around, it's still true. Like, people still come back to it. And that same sense of the number now has a story, and the story makes the number better, is that the draw of crypto, why any of this, I guess, why I'm even here in a Bitcoin conference of it all, is I echo a belief in the story of it. Like, it's not just, oh, the number's going up. There's a actually very compelling story. The myth-making of Satoshi is, like, one of the best that we got. But within that myth-making, it's not just, oh, wow, someone spun a really good tale. There's an actual ideology. There's a belief system of something that I would argue would outlive the technology. The desire for, like, a human to be free to control their own destiny, that's a pretty primal and old thing, and it keeps going. And so the same, I guess, desire to exert work, effort, proof that we were here, that we tried to do something with the time that we have, that is in art, I see maybe like a spiritual commonality with crypto.
So the danger with being uneducated about a topic is if you're passionate and you speak well, I'm in. Sounds great. Cool. Ted, you know what you're doing here. So what's interesting to you?
Well, I think you asked the right question. To frame it just slightly, Sam Spratt was a very successful commercial design artist and had a very strong career, then decided to leave that and start becoming a digital artist, NFTs and other things. And today is literally a multi-million-dollar selling artist. He's one of the best visual artists, digital artists in the whole world. And to give you a sense for that, using some numbers, every year at Sotheby's and Christie's combined, approximately 100 total artists in all of humanity generate 80% of the sales. Think about that. Think about all the millions of artists we've had since the beginning of time, since we were running around the earth with Neanderthals. About 100 of them totally each year are about 80% of the total sales. So when you run into a multi-million-dollar selling artist, you're really talking about the tiniest elite. Now, this particular one has a special interest in Bitcoin Investor Week because he also owns Bitcoin. And he is an investor in Bitcoin. So I am dying to ask him the question, because I myself have sold Bitcoin to buy his art. I would like to know, and he also buys other people's art, how does he think about selling Bitcoin or investing in art, and how does he think about art as a store of value, and how does he think about it from a perspective of people that love Bitcoin?
I think human memory is always looking for stronger and stronger hosts, stone, song, stories. I would say that Bitcoin is a very, very compelling one. It's one that I would hold more and with greater conviction than most things that I've seen. And art that moves me, I would say compels me even more than that. And so if I would ever part ways with it, it would be because I see something that I think has even greater permanence.
So for you, Bitcoin is the financial asset, not an art asset, and art is the lifestyle asset.
Lifestyle asset, or just proof that we are here, that we're doing things. It's a better way to mark time.
Surely you want to take that one, Anthony. Proof that we're here.
I've asked a million people this question. What makes good art?
Craft, truth, and representing the time that is in well enough that we will get back there again and it will matter once again long after we're gone.
If you look at Bitcoin, does that make Bitcoin art?
I think there's art in it, yeah. It's just a matter of what compels the individual. For me, I like the pretty pictures.
Of course. But the reason I ask is when you think about Bitcoin as store of value, all these things, there's a beauty, I think, in the design of it. And I think one of the things Tad mentioned is kind of this commercial engineering or commercial art component that you have of if somebody does a sculpture, we appreciate it not for only what it looks like, but the fact that it can be so big or withstand time or whatever. I think of Statue of Liberty as a great example, right? Not only is it that it looks cool, it's also just the size and scale and the engineering behind it. Bitcoin, in a weird way, I always think about how much of it is ascribed to the fact that it stores the value versus the fact that as people get deeper and deeper down the rabbit hole, at some point it clicks. This thing is perfectly designed that no other human system or human created system has ever been able to pull this off.
But it speaks to that same, those numbers, that math that governs the universe, right? The fractal that keeps going is, while we're here, we have an opportunity to try to convey it in one way or another. And Bitcoin is one articulation of it that's quite mathematical. But I'd say a lot of what we're doing in this day and age is looking for the spirit in the math.
Tad, you sit in a very unique situation where you like Bitcoin. You like both analog art and digital art, and you like strategy and many other things. But usually in this industry, if you like Bitcoin, you don't like digital NFTs. If you like digital NFTs, you may not be allocating capital to strategy, right? There's kind of tribalism. There's kind of a viewpoint on the world. You seem to cut across a lot of this stuff. What draws you to so many different components of what is really one big industry, but still feels very tribal while you're in it?
Well, I acquire things for different reasons. Bitcoin for me is a long-term, enduring, powerful store of value. I think it is a really, really resilient and powerful digital capital. I would say other kinds of crypto investments to me are, I remember, I think it was 2 years ago or something, maybe a year and a half ago, I actually asked Saylor this question, what he thought of it. And I still can't improve on his answer. They're venture projects. And he didn't mean it in a diminutive way or deprecative way, any sort of deprecation. He meant it honestly. And I agree with him, which is from an investment perspective, ETH, Sol, SWI, any of those, if I might put money in them, are, to me, NFTs are venture projects. And so I don't think of them as a core store of value in the sense that I would think of it that. Now, let's talk about art for just a minute. Art, whether on Bitcoin, ordinals, and we should get Sam to react to that in just a minute, or on ETH, or attached to ETH, or pointing to ETH, or whatever else, art for me is a lifestyle expense. And that's an important point, meaning I agree to exchange Bitcoin into art because I want to look at it, I want to share it, I want to talk about it with my friends. And by the way, for some small portion of the art, I actually even consult AI on this, Anthony, be interested to hear. Some of it I actually go into debates with AI as to whether it will outperform Bitcoin on a 5, 10, 15, or 20-year basis. And there's very vanishingly few pieces of art that it will. I bought his. That's not a sales pitch. I love his art. But that is the rigor one has to have when one's thinking about it purely financially.
NFTs on Bitcoin? You do anything with that? Ordinals?
I'm not.
Why not?
So if playing in the background here up there, you're going to see these massive paintings. These things are made digitally, 40,000 some odd pixels wide. And on top of them are all of these dots.
That's your art, right?
That's my art, yeah.
That's pretty crazy.
Thank you. But all those dots it's cycling through, each one of those dots is owned by a person, a token on Ethereum. I know, a little sacrilege.
Yeah.
Boo. Okay.
Roll this back, Sam.
Yeah, all right.
Just say that last sentence one more time. Let's make sure everybody rocks to it.
Okay, so those dots are people. Like, that's another person that has collected my work. That singular piece, one person has, just like most people would collect a piece of work. But there are hundreds of people that have inscribed, they've left little pieces of themselves on top of it, creating this link between the few and the many, all congregating. Most of my work focuses on congregating. And to have this work displayed and interacted with on-chain in a meaningful way, right now, at least, right now, Bitcoin ordinals does not allow that. It's not to say it won't or can't.
It's a technical issue, or it is like an interest and liquidity issue?
No, it's a technical issue.
Explain.
Right now, in order to get an image this size, requires a technology called recursion to basically create it many, 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 many times over. Because the Bitcoin network, a part of what makes it so profound and strong and long-lasting is it's quite expensive. And so Ethereum, it's a little leaner to get something like this on there and have some permanence, let alone having hundreds of people gather around and contribute thousands of bits of themselves atop it.
When you talk about your art, if I just met you on the street, I didn't know Tad, and you said you're an artist, and I asked, what kind of art do you do? How do you think about the style, the meaning behind it? You seem like a very philosophical person. First time we're meeting. What kind of art do you do?
Pro-human art. We kind of have lived in this period of time that's very, what in the art world is called post-humanism. We kind of flog ourselves, we're the bad guys, we're killing our world, we're a virus on this whole thing. And I just really don't subscribe to that. And I think a part of where that mentality has come from is we have put a lot of faith in abstract things and kind of pleasing to the eye colors and shapes that one can place around them. And the idea of returning to something that is actually figurative, it's not an imaginary meaning. Quite a lot of work and time and effort, the proof of work is imbued in the art through the long articulation and creation of it. What ends up happening when you do that is every now and then, like Tad or like some of the other people that have collected my work, is when I do manifest it physically. I have these two collectors, Mickey and Becky, husband and wife, and they're out in Silicon Valley, and they have one of the pieces that's shown here, Masquerade, this big tableau in the jungle of degeneracy, debauchery, camaraderie, but there in the heart of it is a man, a woman, and child, while the chaos kind of swirls around them. And they hang it up in their dining room, and every single week they have Shabbat dinner there, and they invite a dozen or so people from Silicon Valley to come over. And it's kind of a weird thing to put in there. It's not pleasant to look at in some areas, but every single time it elicits a conversation because someone can find something in it in a way that if you're just looking at a nice big red splash on the wall and you're trying to project something on it, I think the world is trending away from that. I think people are actually looking for meaning that is actually placed in it by design, much like you were articulating before about the white paper. And here we are.
Tab, my last question is, when you think about art, crypto, Bitcoin, etc., how do you ascribe value? And you talked a little bit about art outperforming Bitcoin, etc. I think that's a pure outperformance. But actually, if you go to the other side of the equation, I don't want to lose money. I don't want to buy something that is worthless in the future. So I don't need it to appreciate. I just want it to not lose. How do you think through that?
The vast majority of art you buy will depreciate or be demonetized by Bitcoin. So you have to immediately get to the place where you say, I'm buying this because I love it. That said, your follow-up question is really powerful, Anthony, which is, how do I minimize the leakage in the value over time? And on that, I think you can be quite rigorous. There are a number of steps to think. In short, you really want to think about, is it arresting? Will it be famous? Is it important? What does it mean? Why do I like it? What ascribes value to it? And there are a series of levers for it. So I want to leave you with one other thought, Andy. Anyone who follows you as avidly as I do can't come away without a question in 5 to 10 years, what does this stuff mean? And art is the other side of Bitcoin. Bitcoin is a powerful store of value in a world of increasing AI and uncertainty. Art is a powerful store of value, both human and potentially financial, in a world where humanity's purpose is increasingly going to be a question. You hit that all the time, and I just wanted to say Sam is at the cornerstone of that kind of thinking. And when I look at art, particularly digital art, the memory of humanity is going to be really important and valuable. Thank you.
Damn it. My whole goal of doing this conference, I tell our team, don't lose money, and now this guy's going to convince me to buy his art, and I'm going to end up losing money on this thing. All right, thank you guys very much. All right, where is Ryan? Where is this guy? All right, are you ready? Holy shit. All right, here we go. Ready? He's a mentalist. He's going to come up here. I have no clue how they do this stuff, but it's a little bit of entertainment value. He's warming up, which tells you everything you need to know. So, they're moving the desk and everything. This is like really serious. All right. Do I need to do anything to prep these people, or you just take it from here?
You need to do nothing, Anthony. I'm just going to take the stage. Thank you for having me today. Hello, everybody. How we doing? I've enjoyed the conversations thus far. Thank you, Anthony, for inviting me here. I'm a magician. I'm a mentalist. I'm also a Bitcoiner, all right? I've been following this space for years, and like many of you, I was intrigued by the mystery of Satoshi from a magic and mystery point of view, but also I was very much enthralled by the idea of a decentralized exchange of value. Now, the idea that two complete strangers can exchange information, value, money, completely anonymously is brilliant, right? We're going to have two people right now exchange information in this room. We're going to connect two people in this room in the most random way. Now, we all know how the Bitcoin network works. We're not going to be doing this digitally. We're going to be doing this completely analog, in the most analog way, actually. Now, before I start, I need to introduce you to one person in the room. He's all the way in the back, and he's sort of the beginning of this transaction, of this connection, if you will. His name is Vatsal. Vatsal, can you stand up? Everybody say hello, Vatsal. You've got a room full of friends now, Vatsal. I'm going to ask you to just verify what I'm about to tell these folks, okay? He was in the back of the room. He's one of the first people to come into the room this morning, and I said, hello, I'm Ryan. I need your help, because in about 3 hours, something's going to happen on this stage. It's about to happen. I gave him the New York Times. It was the first page, the broadside of the New York Times from Saturday's edition. I think they were talking about the main headline was the Dow at 50. Right? So I gave him the headline, I gave him the Times, and I said, hey, I want you to look through and find a word that you'll be able to remember for about 30 minutes. Or sorry, 3 hours actually was the time, right? Any word in the paper he had a choice of. Is that true so far? Yes. My back was turned. I said, look anywhere you want. All that I ask is it's not a pronoun. It's not a preposition. It's something with at least a few syllables. You look through, you found a random word. My back was turned the entire time. And then you put that paper into an envelope, which I'm hoping you still have. You still have that envelope? Good. Can you take it out? Inside that envelope is that sheet of newspaper. Now, before we figure out what the word is that you are thinking of, Vatsal, I want to ask you a few questions. First of all, did you tell anybody this word? No. Just like a seed phrase, these words are in your head only. No one knows this word but you. Is that correct? Fantastic. Was it a completely free choice of any of the words in that paper? Hundreds, if not thousands of words in that sheet of paper. Is that correct? Fantastic. And then finally, the most important question, do you still remember the word you picked? That is the most important question. We're going to try and find that word, Vatzel. We're going to do it with the group here, all right? Just like a Bitcoin transaction going through the network, you got to have people who verified along the way. You can have a seat. We'll come back to you in a minute. We're going to try and find this word as a group. Here's how it's going to go down. Inside this envelope is that piece of paper. And we're going to try and find some people here to help us along the way. Let's go all the way to the back of the room. Gentleman who's looking away. There we go. I got your eye. How you doing, sir? Hello. Very simple question. We got the sheet of newspaper here. Well, New York Times front section. I rip it down the middle. Are we going up? We going down? We're going down? Not very optimistic of you, but that's fine. I thought it was up only in this room, no? Down? Keeping it or discarding it? Keeping it? Okay, fantastic. Let's keep it going over here. Gentleman right here with the beard. How are you, sir? Well, are we going to the top or are we going to the bottom? We're going to the top. That's the optimism I was looking for. There we go. Are we keeping it or discarding it, sir? You're doubling down. I like it. I like it. Good. We're going to the top. Let's keep it going. Over here, gentleman in the shirt right here. How you doing? Boom. North or south, sir? We're going north. Keeping it or discarding it? We're keeping it. Good. We're going to go one more, and that's going to be you, sir. How you doing? Uptown or downtown? We're going uptown. Keeping it or discarding it? We're keeping it. Fantastic. You know what that means, sir? It means you need to join me downtown on the stage here. Give this guy a round of applause. He had no idea he'd end up here on stage. How you doing, sir? Good. Your name? Kevin, I'm Ryan. Pleasure to meet you. Kevin, I'm going to ask you to do me a favor. Step right here, front and center. I want you to put your left hand on your hip like this. Your right hand's going to come up like this. We're going to sing I'm a Little Teapot. No, I'm kidding. But what I want you to do, Kevin, to put your finger up there towards the top right-hand corner of the room. Beautiful. Then bring that finger down there towards the bottom left-hand corner of this stage. Fantastic. Yeah, man. Let's give it a little motion. Yeah. Give it up for Kevin, everybody. It's just me up here. We had to make the show look a little bigger. All right. So now get to the real stuff. Finger up like this, Kevin, okay? A guy with glasses like that, I knew you could dance, okay? Put your finger up like this. Put your finger down like that. Good. In a moment, Kevin, I'm going to say ready, set, go. When I say go, you're going to drop it from here to about here onto this final sheet of paper we have left, all right? All that I ask is you bring it down nice and slow, not too hard, not too fast, and right down onto the paper. That's it. Yeah, nicely done, Kevin. Nicely done. So, finger up. Are you ready? Here we go. Face the audience. Close your eyes. Let me make sure this is properly orientated. Here we go. Ready, set, go. Shh. Poof. Nicely done, Kevin. I'm going to bring this up towards your eyes. When I do that, I want you to look at the word directly above your finger, but don't say it. Don't say it. You got that word? Right? Yeah, you got it? The long one? Good.
Got it.
Yeah?
Got it.
Okay. Don't say it. I want you to write it. Okay. Whoop. Dropped it. Excuse me. I'm going to ask you right now, big pad of paper. I'm going to give you the pad. I'm going to give you a big pen. As they say in art class, use the space, Kevin. I'm going to have you write that word down. Make sure no one in the audience can see it. Vatzel, could you stand up, please, for me? It has been over 3 hours since you perused that one section of the New York Times. You locked in on a word that only you know. The room helped us narrow it down to one single word that he just wrote down. Are you done, Kevin? Fantastic. Keep that against your chest for a minute longer. If you would now, Vatzel, in a loud, clear voice, tell us, what is the word you're thinking? Wistfulness. Kevin, how did we do? Wistfulness. There it is. Kevin, thank you very much for your help. Nicely done, Kevin. Nicely done, Vatzel. Folks, I'm Ryan Oakes. Find me during lunch. I'll be performing during lunch. I'll also see you at the end of the day. Thanks so much for having me. Take care.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
you have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you. My point is, sometimes you realize that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, and you don't have money, and may you have money again, and you don't have money, you have money. Then when you, my point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then may you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when you that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
We've spent 12 years proving one thing. Security and scalability are not trade-offs. They're the same product. As a pioneer among digital asset infrastructure companies, there is one thing we know. Digital assets will continue to innovate, and BitGo is designed to harness that innovation. The future of finance is being built right now by the visionaries and disruptors all on the BitGo platform.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
Don't have a way to respond back to them. So I'm very excited. We've got Christian Carlo, who's going to come up here, former CFTC chairman, also very well known as Crypto Dad. I think he's a best-selling author. He's got lots of unique opinions. So let's go. Let's do it. You get to pick your seat, whichever one you want.
I'm coming in close.
All right. Right next to you. I think it's right there. There you go. All right. Everyone is very interested and worried about regulation. They saw that once politicians got into Bitcoin, that seemed to be like it was a good thing. But now we're back to where we were before the politicians really were excited about this. How do you think about whether the political process has been a net positive or negative so far for Bitcoin?
So when the Trump team came in, they came in with a three-phase approach. And 2 phases of those have been completed. And yet now, because the third phase is not done, we're forgetting about what was all that's been accomplished. So let me go through it. Phase 1 was to just get rid of the bad policy, the suppression of crypto, the attack on crypto. And that was a matter of replacing rogue regulators with a good set of regulators. Well, we've got Paul Atkins at the SEC, Mike Seelig, the teams at OCC, the Fed. The bad policy has really been stopped, and let's take a moment and breathe and realize what a change of pace that is. The second stage was to deliver on a series of campaign promises. Crypto Council, stop selling the crypto, Bitcoin and others that were seized as part of the federal government's actions, and to create the type of full government approach to the furthering of crypto innovation, which is part of an overall approach of furthering all kinds of innovation. Space travel, AI, drone technology, biotechnology, nanotechnology, all of which are now being accelerated. So the first two phases of this approach have been done, and we can't lose sight of it. But the third phase is the ultimate one, and that is not only having executive actions and good regulators in place, but actually codifying it in law. Well, let's tip our hat. I know it was only an appetizer, but getting Genius done, think about it, the first major financial service legislation in 15 years since Dodd-Frank was done within 5 months of the new president taking office. That's a pretty awesome accomplishment. But we do need to get the Clarity Act done. And I would argue that crypto doesn't need the Clarity Act as much as TradFi needs the Clarity Act. Crypto builders are going to build. We're going to build here in the United States, we're going to build overseas, but we're going to build no matter what the government does. TradFi, on the other hand, can't just go overseas. And if they're going to commit the type of billions of dollars necessary to really build crypto out as financial service architecture, then they need regulatory clarity to do it. So they need this. And I tell the banks all the time, you need this more than the crypto builders don't. If you don't do it, if you don't get this done, they're going to go overseas and build, and then 10 years later, they're going to come back and eat your lunch.
Now, what's interesting to me is you can decipher what the rules are or set the rules by going through the legislative process. Sometimes you got to go through the judicial process. And it feels like everything pre maybe 2024 was all done in courts. And I think that was something that a lot of the industry was very frustrated by. But it definitely created the rules that I think maybe the politicians and or law enforcement wanted. Now that we're going through the legislative process, it feels like people are getting kind of introduced to the grinding of, this checks and balance system to actually get these rules created. Are there times where maybe we should have been happy that the courts were setting some of the rules rather than going through, kind of the drama of the Clarity Act and some of the stuff that we're watching now?
So the courts didn't want to be doing that. It was foisted on them by the Biden administration, where their official, although never announced policy, was to not make rules and try to suppress crypto as much as possible, and if necessary, force it to the courts where it would be a jump ball in terms of what decisions would come out. And that's exactly what happened. That's no way to run a railroad. That's no way to run the world's largest economy. The right way would be to get legislative action. I know you spoke to former Chairman Henseling earlier, and I understand he's handicapping this at 60-40. I think that's probably about right. We'll have to see the way the wind blows. A lot of this is political, and a lot of it is congressional politics, Senate politics. Some of it is TradFi versus crypto. So it's complicated if this is going to get done, but I would also agree that it's probably a better chance it gets done than it doesn't get done.
You mentioned that this stuff helps the banks and the traditional institutions much more than it helps the crypto people. If Clarity gets passed, is it beneficial? Are we actually better off if it doesn't get passed because it gives the crypto people an advantage because the banks are still kind of boxed out? Or is this something that gives kind of both sides, kind of same playing field, and actually that's what crypto people should want?
Ever since I fell down the crypto rabbit hole at the end of the last financial crisis, I've always looked at crypto as a better architecture of finance. And I still look at it that way today. Of course, it's an awesome new alternative asset class, but far more important, I believe, is its role to underpin the new financial system. It's a digital network architecture of finance. It's in all of our interests that we have the type of national legislation that we had back in the 1990s, the Telecommunications Act, that unleashed the first wave of the internet. It gave it a sound legislative and legal underpinning. I think we all need a sound legal underpinning so that whoever is elected in the next presidential election can't, at a whim, as it was done in the last, become hostile to this innovation. If we put the American economy on a digital network architecture, we're going to win the next century. We've got to have that legislation, I believe.
Now, there's a case in, I think it's Nevada, Crypto.com. You filed an amicus brief, which makes me sound smart, but I don't know what that is. Describe what's going on in this case and why are you getting involved?
So, first of all, I'm a big believer in prediction markets. I think prediction markets, along with stable coins, are one of the first big use cases of what I call the Internet of Value, this new digital architecture of finance. I think prediction markets, who here actually agrees with me, prediction markets are a fundamental social improvement. So, let me tell you why I think that's the case. And I'm going to ask another question to the audience. How many people here checked the weather report before they came out today? Or at least half. I tell you, a lot of times I do this, it's always 2/3 of people. You check the weather report to give you some degree of certainty, right? And you know, it may be 10% wrong, but 90% odds that it's going to rain are a good enough reason to bring an umbrella. But think about all the other things in your life where you have no certainty. Will an air traffic controller strike go another week? In which case, maybe you cancel that trip to Chicago. Will interest rates go up or down? Maybe you're going to buy that condo in Florida or not, depending on interest rates. Will a presidential or congressional election turn out one way, in which case I'm going to buy energy stocks or not, or sell energy stocks? These things have real impact on our life, and polls just don't do it. Polls contain a lot of bias. The average polling sample is 1,200 people. But with prediction markets, where you're incentivizing people not to give you their bias, but to give you their informed opinion on something, you can get samples of 10,000, 100,000, 1 million people. And in 2024, where more people went to the polls than ever before in human history all over the world, the prediction markets at Polymarket and Kalshi were right in every one to a fraction of a percentage point. Think about that type of predictability in our lives that we're now going to enjoy once these markets are properly regulated and licensed. And that's the reason why I filed my amicus brief. Because what's happened is, under the Biden administration, of not asserting federal jurisdiction in this area or challenging federal jurisdiction, the courts have been left to making decisions, and they're making a patchwork of decisions at the state and local level. It reminds me a lot of when Uber first came out, and people said, wow, ride sharing is a really great service, only to discover they flew into a local airport and there was no ride sharing available because the local monopolies, taxi monopolies or taxi and limousine commissions limited their access. And it was only when society said, no, we want this service and we're going to bust through these monopolies to make it available everywhere, that ride sharing really took off. I think the same thing's going to happen with prediction markets, but fortunately this time around, Congress gave a federal agency, the CFTC, the Commodity Futures Trading Commission, which I formerly chaired, authority over these markets and preemptive authority over state and locals. Up till now, though, the role of the CFTC has been given short shrift in a lot of these cases. And Mike Seelig is still getting his feet under his desk at the CFTC. So as a former chairman, I decided to file a brief in a major case that's taking place between the state of Nevada and Crypto.com, where the federal preemption argument was rejected at the local level, and now it's gone to the Ninth Circuit. And I inserted a brief making clear that Congress intended for federal preemption. It really was something of a placeholder before the CFTC itself can intervene. And just last week, they announced that they do intend to intervene in that case.
So it's always fun when I disagree with somebody about something. I agree for every different example you use, the prediction markets are incredibly powerful and are net positive. The thing I've always been like, this feels a little crazy, is if we have young people who are betting on how long the press conference is or what color the tie is, or is somebody going to say a certain word, etc. So I'm fully well aware that sometimes you get, things that may not be as constructive along with the innovations and the positive impact. Do you think that there should be a line? Right?
Absolutely.
It's kind of like the same thing with the crypto tokens, right? It was like, hey, some of these are really valuable and some of them are pretty obvious. Like, well, you know it when you see it. This is, not conducive to what we're trying to accomplish.
So look, CFTC has been regulating contract markets for 90 years. They've worked out where there are fraudulent activities, market manipulation in traditional markets like wheat futures and gold futures, and they're still, going after people today. The same thing will happen in prediction markets. Once it's clear the CFTC's authority, then they will write the rules. They will work out these issues. I think you're absolutely right in things like these mention contracts. Will somebody mention something in a press conference? Those could be easily manipulated. But I have every confidence the CFTC will be able to work it out. So you'll be able to have good, true markets for election outcome and for some of these more dodgy ones. And by the way, the states may still have a role. I could see a state saying, look, we don't want gambling on high school basketball games. It's too easy to manipulate. We don't want minors engaged. There's still a role for the states under federal regulation, and I have every confidence the CFTC will address those issues, those type of ancillary contracts, and yet we still can have a national market.
If we follow this down, I actually think prediction markets are pretty interesting corollary to what we've experienced in crypto. So if you go back a decade ago, everyone was talking about, and there was many cases where a coin's going to get listed on an exchange, and some employee knows that, and they front run it.
Yeah.
And they go buy the coin, or they change the user interface or whatever. So it was a version of insider trading that did not require kind of the material non-public information of a public security. It seems like that's a big topic now. There was a big interview on CNBC today of, how do you as a prediction market stop this stuff? Because part of it is also, well, that is the value proposition. Is someone in the world knows something, and so they're putting it forward, and that should help with the predictability. And so if you go back to the presidential election market, the big one, I think it was on Polymarket, the French whale, as they called him, he basically ran his own study, which was like the neighbor poll. And he came to the conclusion, hey, the regular polls are wrong. This is right. Here's going to be the conclusion. So to me, that feels like a really valuable piece of information.
Right.
And it's not insider trading.
And he brought it to the public, right? The beauty of these markets, right? In insider trading under American law is actually a very narrow area. It only applies where you have an enterprise where the insiders in the enterprise know how the company's doing. They know that it's going to make a new acquisition, and they have an obligation. They have a limitation on trading on that information. It actually doesn't apply in many other markets. So in commodity markets, commodity futures markets, only Mother Nature knows what the weather is going to be like in a given area and whether the crops are going to be good. But somebody who may be following the weather and thinks that, in our county, the weather's been really bad, so the crop's going to be bad. So what does that mean? That actually means the price is going to go up because of scarcity. Somebody can actually trade on that information, and it's in society's interest that they trade on that information. Why? Because that person hedges his or her risk, but more importantly, they bring that information to the market. So in commodity markets, we don't have the same concept. We actually want people to trade on their knowledge, and by trading on it, they're expressing a view into the marketplace, so you get to true price discovery. So this notion of insider trading, our law has recognized only limited areas when it applies. That doesn't mean that in some of these other areas, people might not have a duty. So whoever knew that we were going to get Maduro overnight and traded on it, that person may have been an employee of the Department of Defense who had an obligation not to trade on it. And there are sanctions for that, even under CFTC laws as well, the Department of Defense. So the point I'm making, though, Anthony, is we can work through these issues in a mature, sensible way, but we shouldn't simply say, well, because there's possibility, let's get rid of this whole new innovation.
Yeah. Well, what I find interesting, I think the one they were talking about this morning is there was somebody who knew whether it was the songs or whatever for the halftime of the Super Bowl, and because they were there for the rehearsal, so they turn around and they tell people, which is that insider trading? Is it not? Right? Kind of goes to this thing that you're talking about. But I do think, as we innovate in all these areas, right, whether it's artificial intelligence, crypto, prediction markets, et cetera, we start to introduce these new kind of paradigms. And what I find maybe most fascinating is sometimes the law is very clear, right? I used to always say when it came to Bitcoin and crypto, like, if you commit fraud, it is fraud. Right. Vice versa, there was a ton of stuff of like, what exactly is a security? And I think that people were very surprised in kind of how this came down. And so you still practice law today. Yep. As you kind of go through this and you talk with clients, When do you kind of say, hey, look, let's go in and be the one to go and actually help create what these rules are going to be and be innovative versus kind of first man through the door usually gets shot and it's the second one who may be a little bit safer?
Yeah, back in 2017 when I became chairman of the Commodity Futures Trading Commission, we were approached by a number of the big exchanges, CME, CBOE, Cantor Exchange, about their launching a Bitcoin futures market. And it became very controversial as to whether we at the CFTC were going to allow this marketplace to go forward. There were full-page ads in the Wall Street Journal taken out saying, don't green light this new product because if you do, it's going to be too dangerous. It's going to destabilize the financial system. There were calls from European regulators saying, Giancarlo, if you do this, you're going to let Pandora out of the box. You're going to bring down the system. And I said, wait a minute, hold it. It's not for presidential appointed regulators to decide whether a new market can go forward. We're not King Solomon. If Congress wants to ban an otherwise legal product, that's fine. But our job, in fact, our duty, is to put a regulatory structure around a legal product. If people want to use this product, we don't get to say whether it's in their interest or not. It's not a paternalist, we're a capitalist system. If people want to use something, our job as regulators is to find a safe way, free of fraud and manipulation for people to engage in it. And I stick to that today. So we've got these new things, stable coins, we've got these new things, prediction markets, we've got these new things, perp markets. Regulators' job, their duty is to build a regulatory structure to figure out all these complicated things and write the rules for it. But it's not for them to say, oh, it's too dangerous, so we're just going to somehow try to stop it. That was the flaw of the Biden administration. They didn't like it, and they tried to stop it any way possible. And quite frankly, that was an illegitimate and actually unlawful approach to that innovation.
Any of them going to get in trouble?
No. It's the truth.
They didn't get reelected. I guess that is one piece of it. CFTC and SEC, to me, kind of seem like brother and sister. Usually they get along every once in a while, though. You got to spat when mom and dad aren't looking. How does that relationship, like you sat on one side of that, you obviously have friends who've worked in the SEC, et cetera. For the people who are not familiar with the regulatory bodies, et cetera, how much of it is collaboration versus they're kind of two different domains and there's not a lot of overlap?
It's Venus and Mars. When I spent 30 years in business before going into government, and I couldn't figure out why do we have two different market regulators and their rules are so different. It took going into government and working at one of them to realize there's really a fundamental difference. SEC oversees markets for capital formation. CFTC oversees markets for risk transfer and risk reallocation. But the SEC exists really to do one thing, and that is where there's a corporate enterprise and you've got insiders with information, their role is really to even out those information asymmetries. They oversee a whole structure of disclosure documents and registration to make sure that those insiders share with the public what they know on a regular basis. And even we have to acknowledge it's an imperfect sharing because it only happens every 90 days. So on day 89, the insiders have, again, all this information. On day 90, they share it every quarter. The CFTC has a completely different framework. The CFTC operates in markets where nobody has insider information. It's not an enterprise. It's futures on commodities. It's futures on metals. It's futures on petroleum. It's futures on interest rates. Nobody knows where that's going to go. And so you encourage everybody in your markets to bring that information to the marketplace. So you share it with everybody through a market structure and you get better price discovery. And I believe the reason why these two agencies have always been rivals, because the SEC looks over at the CFTC and says, you guys don't have a disclosure regime. And the CFTC says, why do we need a disclosure regime when we get everybody to disclose what they know through the marketplace, and then everybody benefits from what everybody else knows? So it's a completely different structure. Now, I'll say this. Our founders believed in divided government. They thought if government is competing with each other, then they're not competing with the citizens to strip them of their freedoms. And I think the two agencies, because they're in constant competition, have become better. The CFTC has traditionally been a much more innovative organization. I think it's challenged the SEC to do a better job. It was the CFTC, this first regulator, not just in the United States, but in the world, to create a full regulatory structure for derivatives on crypto, which has become the model for the rest of the world. We forget that because we think the United States is so behind. We don't have market structure legislation. The CFTC was ahead of the world.
We're good at regulation, is that what you're saying?
We are.
We are good.
We are better. Our regulations are more flexible than most of the rest of the world.
I completely agree. That's why we're a nation of risk takers. It makes complete sense. Before I let you go, you wrote a best-selling book, Crypto Dad. Talk a little bit about that book, and you have another book coming out in October, which is The New Adventures of
Crypto Dad. So Crypto Dad was a name that I'm very proud to have been given as opposed to adopted. In 2018, not long after we greenlighted Bitcoin futures, despite all of that controversy, I was hauled before the Senate Banking Committee to justify what we had done. And in those days, crypto wasn't a Republican or Democrat issue. It was more of a generational issue. And you got a lot of old senators who were pretty upset with me for greenlighting something. And so I had to explain what I had done. And I had submitted a brief that was like 60 pages, chapter and verse, what we had done. And if you've ever watched these hearings on television, you realize they're meant to intimidate the witnesses. And the most intimidating of all is the Senate Banking Committee. These senators sit on a raised dais, and they have these bright lights behind them. And they put the witnesses at a table that's just markedly lower than most tables. It reminds you of like a first grade classroom. You're sitting there like this, and you've got to stare up at them, and they're staring down at you. And so when my time came, and you have these lights in front of you, the green, yellow, and red. You've got 4 minutes of green, then it goes yellow, and then it starts flashing red, and they'll cut you off with the gavel. So when it came my time to speak, I made a showing of pushing my papers away, and I said, you know, senators, I know you called me here as the head of a fancy federal regulator, but if you don't mind, I just want to talk to you as a dad. And I said, I have 3 kids that are now young adults. My wife and I have tried to interest them in Wall Street and the stock market since they were babies with absolutely no interest whatsoever. But now all they want to talk about is crypto. And I said, you know, senators, probably some of you have had the same conversation with your kids or your grandkids. And I saw a few heads nodding. And I said, well, you know what? I think we owe it to our kids and our grandkids to get the regulation right and not dismiss it as some childhood thing, but to actually build a proper regulatory structure around it. And as I was saying those words, and I just want to talk to you as a dad, my Twitter handle just exploded, and I got this name, Crypto Dad, and I've stuck with it ever since.
The Twitterverse, they say, oh, you want to be a dad? You're fine. Well, I'll adopt you. All right. Thank you very much. Book comes out in October. We appreciate everything you've done. All right, let's go, guys. Come on. This is like the Avengers deal team coming up here right now. We got Constantine Caritas and Christian Lopez. Constantine is at Reed Smith and Christian is at Cohen Investment Bank.
Hello, everyone.
I know these guys very well. Constantine happens to be my lawyer. Christian is one of my bankers. And I asked Constantine 20 minutes ago, I said, what are we going to talk about today? He said, I don't know. Christian texted me. And I said, well, I'm the one asking the questions, so why are you texting Christian? But I thought a great place.
You're busy.
Well, I thought a great place we would start. How much do you bench? No, I'm kidding.
Well, it's a good question, and I know everyone's interested in the answer.
Let's wait, hold on, before you start going, because we're going to end up in a weird spot. Let's talk about. Next thing I know, you're going to take your shirt off.
Don't worry, people.
Let's first start talk about these digital asset treasuries. Reed Smith did a lot of deals. Many people who are here who did these things, you guys represented. Yep. Christian, you guys at Cohen, along with some other investment banks, spent a lot of time on this stuff. Yep. What is the current state, maybe Christian, from your perspective, on these things, and what does it look like going forward?
Yeah, I mean, $1 million question there.
Trillion.
Yeah, trillion, maybe now billions after the last few weeks. But you know, the market in the beginning, I think, was really interested in the digital asset treasuries, right? Like Michael Saylor kind of led the whole trend, putting Bitcoin on the balance sheet, and it ended up working really nicely. You know, he helped Bitcoin reach new levels, trading at a premium to NAV, and then of course a lot of folks who I think some good actors, some maybe opportunistic, took the opportunity to go do that. The way I think about where we are today, fast forward, 200 DATs later, a ton of, Bitcoin DATs, a bunch of altcoin DATs. But I think, it's a confluence of a bunch of different things. But one of the things specifically for the digital asset treasury sector is, each sector has some like a liquidity profile and market structure. There's a group of investors who invest in biotech, a group of investors who invest in energy, so on and so forth, and a group of investors who focus on crypto, fintech, et cetera. And in the beginning, there was one digital asset treasury company, MicroStrategy, and so the liquidity per that issuer per that stock was pretty high. And as more and more digital asset treasuries came to the fore, that liquidity per DAT thinned out. And that's really, really challenging from a market structure perspective, because in order to raise capital and use the flywheel that MicroStrategy so eloquently did for the longest time, you need liquidity. You need a deep market where there's a lot of trading, there's a lot of volume. You can start issuing more interesting, structured vehicles like converts that investors could hedge against to, earn that yield. And now, fast forward to today, that liquidity is really thinned out. The market, the bottom's kind of fallen out of the crypto market, and there's just not a ton of trading, which makes it challenging. That's where we are today. I'll pause there before we, move to, what the future looks like. But
anything you would add?
No, I think Christian nailed it in his description of what's happened. I do think there was a couple of precipitating factors that led to the music stopping. That whole thing with Binance was a big deal. A lot of money got sucked out of the crypto trades, and I think a lot of who are investing in the deals. I don't think there was a whole new slice of entrance into the marketplace for the additional deals that were going, and the folks that were already in. I think, I don't know if tapped out's the right word, or just we're focused on the investments they had made. So, that said, I'm optimistic for what could come next.
There's a number of
settles.
There's a number of deals that I know for sure Reed Smith and I think Cohen, you guys were working on. The government shutdown happened as well. Yeah. And so talk about like navigating. You're trying to get deals closed, but you've got the market shut down from the government side.
Well, that was an interesting period of time for sure, because when you have clients who are on the precipice of an exciting transaction that's about to get closed in a market that's hot, but having been through hot markets before, that at some point they're not going to be so hot. Not being able to move those transactions forward was eminently frustrating. I know that to be the case for one of our clients who's on the stage right now. And we managed to get through that period of time, but I do think it had a negative impact going forward on these deals, because the market started cooling off as the government opened up. So I think that was a double whammy.
Yeah, I mean, listen, for a lot of what ended up in hindsight happening was the investors who came into a lot of these deals weren't necessarily long-term investors. They were really in it for flipping the shares, and it was working for a long time. You remember early on, the 21 performed extremely well. Nakamoto, ProCap, all trading kind of above where the pipe price was for the longest time. Investors now really they're kind of flippers, let's be honest. We're looking at that, and it was juicy returns. A lot of them were VCs who were looking for 20, 30x upsides to take back to their LPs. The specific to the regulatory timelines and the government shutting down, that killed a ton of momentum, and a lot of the capital that came in was fast capital. So you did start seeing a bunch of pressure from investors asking like, hey, what's going on? And obviously, to no fault of the issuers, the government was shut down and had a big backlog.
Where do we go from here? What are these people going to do?
Well, first of all, I think crypto world tends to be evergreen optimistic, and I'm one of those. I'm a Bitcoiner, right, through and through. But I think a lot of the folks who did this have been in the market for a long time and have seen multiple cycles. So the levels that we're at today, they've seen a lot worse. They've been through the darkest of circles in crypto. So in their minds, and I'm having these live conversations with folks like, hey, what are you going to do with your digital asset treasury? Are you thinking about raising more capital? Are you going to do M&A? Is there an accretive deal to do with another DAT? And so they're all thinking about it, but there's a ton of reasons why nothing's happening in the DAT space from a merger standpoint or financing. On the merger front, on paper, most DATs are trading at a discount to NAV right now, right? if you take one DAT that's trading at, call it 0.9 MNAV, and you take another DAT that's trading at 0.8 MNAV, and you do a deal at 0.85, it's theoretically financially accretive to both companies, right? But it's not necessarily the best deal for the seller, right? The best deal for the seller is getting 1 times MNAV. And there runs a risk from a seller standpoint that if you do a deal at a 0.85 without additional upside structure to get you to that 1 times MNAV, you might face shareholder lawsuits that say, hey, like, why are you doing a deal at 0.85? Why not just liquidate the DAT and do it at 1 times? That's kind of from an M&A standpoint. From financing, just goes back to the liquidity. There's just not enough liquidity per DAT. There's some DATs out there that have volumes traded, right? There's the bigger ones, BM&R, asset entities. There's a few others, but it's just a lot tougher to get financing done.
I think we're going through a maturation of these companies somewhat, albeit under difficult circumstances because of the broader crypto market. A lot of these companies came to market understanding that they had to introduce more traditional operating business or some operating businesses into the mix that would pair with the treasury strategy. And a lot of them couldn't really engage in that because of the way that they did their deals. So if you did a reverse takeover, for instance, you couldn't really be out there saying, I'm going to merge this business in, because that would have been antithetical to the regulatory rules that govern those types of transactions. But now that those deals are closed and those companies that they merged into are now starting to unwind themselves or, with everyone's consent, kind of move to a different kind of a perspective, you're seeing new businesses are going to be launched or being bought or merged into these businesses. And I think that will give the market some confidence around these businesses that it's not just the digital asset treasuries that are part of the economic investment decision making, but that you'll see the digital asset treasury will be attendant to the other parts of the business which are new, and I think that'll going to inject energy and kind of make broader defined DATs more interesting.
Let's talk about the intersection of crypto and AI. What are you seeing there? It's one of the topics you said.
I kind of just want to touch on like where we go from here. To be honest, it's
all right. Go ahead.
Really interesting from a DAT perspective.
This is Christian's panel now. He's in charge.
It's an interesting point for a lot of folks in the audience because some of you guys are investors, some of you are running your own DATs. It's certainly a relevant topic here. They're gonna need to do something at some point. The various DATs that don't have necessarily that access to liquidity today or M&A, sure, we'll be back. But in a lot of ways, these DATs are closed-end funds that have a balance sheet, but also you can look at them almost like a SPAC that does not have the redemption feature. And the original premise behind the digital asset treasuries was, hey, let's go put Bitcoin on the balance sheet. Let's fortify our business with an asset that is, deflationary actually, and can protect shareholder capital. And that worked out really nicely. I think it was, optimistic, obviously, and idealist in a lot of ways from the Bitcoin world. We moved to an opportunistic world, but it's going to be a blip at the end of the day. And I see more and more companies adding Bitcoin to the balance sheet. These crypto DATs will ultimately need to do something. I think they become interesting vehicles as reverse merger targets for medium-sized companies looking to access the capital markets.
Crypto and AI?
Crypto and AI. It is so hard to keep up with what's going on with AI and crypto. Where I see the world moving on the crypto AI side is just the agentic payments piece. I think a lot of crypto companies are thinking about how to incorporate agentic payments into their back end. There's a future here, and I'm sure you've had some folks talk about this on your panel, who we're going to have 5 to 7 agents working for us at all times. And I don't know how soon that's going to be, but it's going to happen. And these agents are going to need a way to communicate with each other and a way to transfer value. And the only way to do that is really through crypto to verify that other users that are paying or receiving value from you are accurate. I was talking to somebody who said something really interesting the other day. And we're getting to a world where there's going to be more content generated than the human body combined can consume. So there's going to be a day, and it's probably starting to happen today, where there's just going to be ads and reels and posts and whatever that nobody ever looks at. And so if you're being targeted on your social media channel or email or whatever other methodology to get your attention, I think you use AI agents, like in agentic payments, to verify that the person or the group or the company that's trying to get your attention is not AI. It's a verified real person or verified real company.
You got any thoughts there? Are you guys using AI inside the law firm?
We are, and more as time goes on, those tools are proving to be more
Start
effective.
affecting the bill. Maybe get it down a little bit.
Yeah, they definitely will. They definitely will affect the bill. On the I'm just kidding. In a good
The
way.
accounting department's like, Constantine, shut up.
I think AI is obviously going to have a huge impact in the crypto industry, and I think some of the things you're seeing already happening in terms of managing your crypto and making decisions on trades and things like that is evolving. You know that very well, and kind of that having that kind of platform to help you make kind of your investment decisions or moving crypto around. In terms of like Anthropic jumping into the crypto space, I haven't really seen that as of yet. I suspect they will.
Yeah. There are rumors that SSI, some of the others are trying to figure out, can they use their models to trade in the market? And you don't have to raise dilutive funding if you can just make money in the market, right? So there is this belief that at some point the models may be able to do that.
Yeah, but I think there's a flip side to every trade. So somebody's losing on the other side of that trade. So I'm not sure how that would play out entirely.
What about with M&A? Like, what are you guys seeing there? Are we still seeing the IPO boom, all the M&A stuff that was kind of middle of last year and the end of the year?
In the public market, SPACs are very hot, including in respect of AI in particular. We're seeing a lot of activity there. I think it may be one of the largest, if not largest, years for SPACs. And that cuts across all industries, including some crypto-related opportunities that I'm seeing that are really credible and interesting. So I think you'll see crypto digital asset companies continue to demand capital markets. They just won't be structured as DATs. They'll be operating companies looking for accessing capital markets. And on the private side, M&A is booming right now across sectors, including a little less AI. I think these companies are all kind of earlier stage, so they're kind of still growing and looking for capital from investors in Series A, B, and C. But M&A in other sectors is very, very active, and including in the digital asset space. You've seen a few deals close this year as companies try to scale up to either go public or just to kind of be more diverse businesses.
Yeah, on M&A, I think we're like at the very beginning of a wave of M&A. And I think people have been talking about M&A in the space and consolidation for the longest time. I think there was probably a pause and delay for everybody to dip their toes in digital asset treasuries and that whole thing. But we're starting to come to a place where M&A is going to happen. And there's a ton of different reasons, but I think the main driver right now is that the regulatory rails are being put in place for crypto for companies to use crypto as distribution, as sales, and it's becoming a more legitimate asset class. The hardest part in crypto has never been the technology, right? It's been distribution, adoption, and regulatory. And so, I think with Clarity Act coming, the crypto companies that have had a harder time scaling for one reason or another, whether it's capital, whether it's regulatory, whether it's distribution, are going to start feeling even more pressure because the balance, it's going to be really hard to compete with the balance sheets of the banks, of insurance companies, fintechs that are well funded, because they all have the distribution, they have the tech capabilities. So they're facing a little bit of an existential moment where you can see the cliff that you're running towards pretty soon, where you say, okay, I haven't gotten the traction. I don't have the revenue profile that I'd want to, or that my investors want to do when they funded me at 2021 valuations. I either have to take a sideways round here or a down round, or try to keep going on my own, but be outcompeted by the big firms that are most certainly coming to eat my lunch. So they're starting to see that. We're having these conversations. And it's because the big firms are like in buy or build mode right now. It's still early, but they're making these decisions in the boardroom saying, all right, crypto's a thing. How do we attack it? Do we build it internally, use our balance sheet and our distribution, or do we acquire? So if I'm a mid-scale, subscale crypto company that has interesting tech, maybe some distribution, maybe some licenses that'll accelerate the usage for a bigger firm, then I'm probably thinking about running an M&A process, because I either take a sideways or down round today, or I don't want to be like doom and gloom, but you might be looking at a zero in a few years.
Out of personal curiosity, it seems like there's a really big theme around retail investors and also people with large audiences building these businesses. Historically, those businesses have been outside of regulated industries, but we just saw yesterday Mr. Beast announce that he's going to buy Step, which is a banking app focused on Gen Z. And that feels kind of like a shot heard around the world that now you've got somebody whose audience is really teenagers to like early teens, who's now going to go into one of the most regulated markets in the world on the finance side. Any thoughts on that type of stuff where people would not think of Mr. Beast as a private equity firm or as an acquirer of an asset, but obviously is very powerful from a marketing standpoint?
Just on a personal level, having kids who are kind of connected to that world, that moves the needle. People want to know what he's selling and want to participate, especially once they have some assets. The kids are, at various points for Mr. Beast fans, but they don't have any money, so they really can't, of their own, they can't really jump onto the app just yet. But they do buy his chocolate and hamburgers. So when they get a little older, we'll see. But it's not dumb for him to get ahead of that space.
Oh, come on. You could just give him a little bit of cash to open up an account.
Well, it goes fast. It goes to, ends up in these prediction markets you were just talking about on football games and other stuff. So
they got a polymarket account, but they can't get a banking account. Okay.
It's in my name.
All right. What do you think, Christian?
I'm not surprised that Mr. Beast bought a bank. Like, I think, tech is supposed to be invisible. Crypto's had a hard time being invisible because the UX is really challenging, but that's changing. The UX is, becoming better and better. It's all about distribution, especially on the consumer front, right? Mr. Beast has, I think it's like 800 million subscribers globally to his various channels on YouTube and Instagram and TikTok. Like, that is juicy. Like, when investors look at that, they get dollar signs in their eyeballs. And how do you target that? I mean, he has a great following. It's a new generation coming up that's going to see a transfer of wealth from their from their parents and grandparents. And where are they going to put their money? They're going to do it all online. They're going to be self-directed investors. They're going to invest in crypto. So there's going to be a massive wealth transfer that's happening. And Mr. Beast is smart by thinking about using his distribution platform to do so. And again, the tech isn't hard. Like, he's white labeling. He bought the bank for the UX, but the bank is white labeling the license from Evolve Bank. He's probably gonna, or at least thinking about starting a stablecoin, a Mr. Beast stablecoin, to have system payments and some benefits for being part of Mr. Beast. And he's probably gonna white label that as well. So the tech again isn't the hard part. It's the distro. And I wouldn't be surprised if there's a world where other influencer types that have these massive followings start, doing something similar, like a Ronaldo coin or a Messi coin, right? Things like that.
I appreciate both of you guys coming. As much as I like to play around with these guys and joke, we have a good time. Cohen and Reed Smith are both very good at what they do. I appreciate all your guys' help over the last year, specifically in some of the deals. It's been some fun times, It's been a couple moments that,
That was fun.
Yeah, fun. That's the way we should describe it, just fun?
We're not done.
And
We're
that's
not
fun.
done.
We're not done, yeah.
Overall fun.
You ever, the best story that I have is, I think on my 5th wedding anniversary, my wife convinced me to go on a trip, which meant that was, of course, the weekend that we were going to close our deal. And at about 2 o'clock in the morning on Saturday night, she looked at me and she was like, "Is this over yet?" And I explained to her, I said, "This is only one deal these guys are working on." And I said, "They do this all the time. I'm glad this is just one deal I'm going to do all year." I mean, Constantine wasn't on the calls, it's a whole different thing, but Christian was. I appreciate it very much. If you guys are looking for bankers and lawyers, go talk to them.
Okay.
All right, Andrew, let's go. By the way, you guys didn't think that bankers and lawyers could be that cool, right? All right, sir, you ready?
Ready to rock and roll.
So I asked Andrew, I said, what are we going to talk about? He said he wants to disprove all the negative stories about Bitcoin.
Yeah.
So which one is negative?
Well, there's meaningful narratives going around, having to do with Bitcoin that are difficult right now. I mean, we could start with quantum. We could start with some others, but I think quantum's a good place to start.
Are you worried?
No, I'm
Why
not
not?
worried. Well, because if quantum is a problem, then we have bigger problems than Bitcoin, right? If quantum is a problem for Bitcoin, then quantum is a problem for your bank accounts. Quantum is a problem for anything automated in your life. It is a much, much, much bigger problem than just a Bitcoin problem. To give you an example, I've seen a lot of narrative on crypto Twitter having to do with quantum. There are some fairly well-known folks that are on the quantum train, right? But
Say his name. Say it.
Nick.
Damn.
Nick the Quick.
You're going to come after the guy he didn't even hear. Go ahead.
So
I'm Team Nick.
Yeah. So I've watched Nick and Adam go back and forth, and I think it's interesting, and I think both of them have meaningful points. But to me, the narrative should not be quantum today. It should be quantum in 10 years, and what are the outcomes associated with the quantum problem if it is a problem in 10 years? And it's much bigger than Bitcoin. I saw a little bit of back and forth on crypto Twitter, and somebody said, well, it is a problem for Bitcoin. It's not a problem for your bank account because, your bank account can just shut things off because they control your banking access and whatnot. And the response was basically, you're kidding, right? Like if quantum's an issue, then the people associated with using quantum have access to all that stuff, and they're shutting it on or off. The bank no longer has control, right? So to me, the quantum issue is so far away from what we should be thinking over the next 2 to 4 years. So here's another data point that I think is really meaningful. It kind of follows the idea of, the elites, let's call it. We're all over global warming, 5-10 years ago, right? ESG was a big deal. But for some reason, the actions they were taking versus their words were very at odds, right? So if you're very, very concerned about sea levels rising, why are you buying real estate on the coasts of Florida and whatnot, right? That doesn't make any sense. So same thing as it relates to, let's call it quantum. Let's talk about the fact that, BlackRock and Larry Fink have become the CMO of Bitcoin over the past year and a half. If they believe that quantum is such a meaningful short-term problem, why are they out there talking about Bitcoin going to 500 to 700K in the near future? One has to wonder. Are they saying those things as some sort of a trap? I don't think Larry Fink and BlackRock are in the habit of trapping their institutional clients who have committed billions upon billions upon billions of dollars in assets to that firm. There's no way that's the case. So there's a disconnect associated with the problem itself and the time and space that we may be talking about versus short-term price action. And when I say short-term price action, I come from a TradFi background, right? I come from the world of wealth management. Short-term timeframes are 3 to 5 years, right? They're not even 10 years. What cracks me up oftentimes about crypto is you go and take a look at, let's call it CoinMarketCap. And what are the time frames on CoinMarketCap? 1 hour, 24 hours, 7 days, right? Whereas in the world of traditional finance, 1 year, 3 year, 5 year, 10-year periods. So quantum, take it off the board. I don't think it's a meaningful issue over the next 2 to 4 years. And I think the huge asset management players in the space don't believe that either, based on their actions, not just their words.
What's another thing you think is a negative that can be disproven?
Well, I think we can talk about the financialization of Bitcoin. And over the past 2 weeks, that's been a negative, right? There's narratives associated with the options, IBIT options, and how that's pushing price one way or another. The ETFs pushing price one way or another. And then hedge funds, wherever they may be located, playing off those particular, financialization of Bitcoin opportunities. The reason why I believe that is relegated to a lot of what your partner, Jeff Park, has to say. And what I come back to is, while there may be moments of increased volatility, and we saw that to the downside over the past week and a half, that also means there is opportunity for increased volatility to the upside that exists. And so the financialization of Bitcoin is not a bad thing. In the long term, it's actually a good thing. In the long term, there's opportunity to diversify risk versus just being beholden to spot price. And you're going to see that again and again and again. So I come back to this reality as a baseline for Bitcoin, both short and long term. BlackRock, obviously, their most successful products are spot Bitcoin ETF. But they just announced a new product that's effectively a covered call strategy associated with Bitcoin, spot Bitcoin price, and then their own options. They don't do that if they don't know that there's meaningful demand for a long time in the future for those products. They don't just they're not some sort of trying to grab attention ETF company issuing a 4x short Bitcoin strategy, hoping to grab 200 million in assets under management. That's not what they're there to do. What they're there to do is bring in new sizable amounts of AUM as often as they can, and then manage it properly. And if that's the track that they're taking, I don't think there's a whole lot of cypherpunks in this room, and that's okay. But this is the world that we live in now, that meaningful financial players find Bitcoin compelling. So think about this for a minute. If we end up in the next 4 years, and I know Mark Yusko has talked about this, and he thinks by 2029 we'll be at 600 to 700K Bitcoin. That's lower than, say, a Cathie Wood. That's lower than some other prognosticators. But think about that for a second. If in the next 3.5 to 4 years, by the way, Larry Fink never makes price predictions about anything, but he threw one out there about a year ago about Bitcoin and says 500 to 700K. So if those two guys, just those two guys, who are pretty sharp guys, think that we're at 500, 600, 700K 4 years from now, what's the average annual return from here? It's extraordinary, right? Now, we may not pop to 200K in the next 6 months. Well, okay, that's fine. But if we find ourselves at 300K 3 years from now, again, what's the average annual return of that? Very, very, very meaningful. We've been in spots in the past decade where there have been negative narratives that we thought in a moment in time were difficult to crack, right? Whether it was an FTX blow up, whether it was a Mt. Gox to really go far back, and everything in between. But ultimately, Bitcoin broke through those obstacles and always goes higher.
When you think about crypto and AI, it feels like AI agents, trading, high-frequency trading on Wall Street, like it's almost like the tech industry is trying to reinvent what the hedge funds have been doing for a really long time.
Yeah.
You guys have a bunch of trading strategies at Arch, et cetera. Talk a little bit about like the technology. So if all the negative stuff is not correct, then people should be bullish.
Yeah.
If people are bullish, there's a bunch of ways to get exposure. Some of that is going to be automated. Some of that is going to be human driven. How do you think about the difference and where the tech is?
Well, leveraging current technology, and by the way, we're in a wave right now where that technology is going to move very, very, very fast. So an analogy that I like to use is probably half of the people in this room, have a Roomba or an iRobot that, sweeps and mops their house, right? And you haven't given much thought to, that would be weird to have a Tesla robot in my house doing stuff. Well, you got a mini version of that Tesla robot in your house, and you may have had one for the last 2 or 3 years. So you're already on that innovation train. Same thing in the world of finance. So for the past 40 years, high-frequency trading, algorithmic trading has dominated traditional markets. So 80+% of all trades that happen across traditional markets are algorithmically driven. They're executed algorithmically. It's the reason why there aren't 6,000 people on the floor of the NYSE anymore shouting at each other. 40 years ago, pull up a picture of the NYSE from 30 years ago. There's thousands of people on the floor. Now when you go to the NYSE for any opening, it's a group of people taking a picture, pushing the button to ring the bell, and then everybody leaves and there's nobody left. Nobody left. That will come at some point to the crypto space. What Arch Public is doing on the algorithmic side, the execution side, the ability to, let's call it, walk into a warehouse, pick a bunch of tools out, talk to our team, and then get extraordinary executions last Thursday and Friday where our clients were buying without their hands on the wheel Bitcoin at 61, 62, and 64, and then 8 hours later they had made 10, 12% on their positions. That is coming in mass over the next 3 to 5 years to the crypto space. That will be another move when it has to do with the financialization of Bitcoin and crypto. So AI will become a bigger and bigger and bigger part of our lives. It's a question of how is it integrated? What is the ease of use associated with AI and crypto, first in finance, and then, where else does it go? Where else does it go, I think, is it's a story that's yet to be told. We probably don't know. Obviously there's theories about, will crypto be used by AI agents who become sentient and then do business with each other, yada, yada, yada. I still think we're, wandering into science fiction novels at that point. We'll get there. I just don't know how. I don't know what it's going to look like. But I do know right now that if you want to have the ability to use AI, to use agentic tools, we offer that. And our customers are uniquely satisfied with it. I'll just give you one quick little detail. Tomorrow at GA Day, we've got a big booth, and we've got a bunch of statistics and stuff that'll be on our LED screen. Those of you that come to that day, you should take a look at the 60-second little video that we have that talks about strategy and Michael Saylor and the position that they've built. If they would have been using our tools in a reasonable way, they would have 40+% more Bitcoin. And their cost basis would be 28,000 instead of in the 70s. That's meaningful.
So how does
outcomes.
the tech work when that stuff happens, right? It's like the AI is just taking a bunch of inputs in terms of all these different signals.
Yep.
And why is, it's almost a dumb question, but why is the software so much better at it than humans? Is it like a lack of emotion, or is there like a black box where we can't even describe what the AI is doing?
So there's the emotional part of it. So the emotion is removed. Your hands are off the machine, but I don't have to tell everybody here this, but Bitcoin/crypto trades 24/7, different than traditional markets. So a lot of those executions are happening at 2 a.m. when you're asleep. So just from a base functional standpoint, the ability to execute entries or exits, if you choose to do so, that can happen at 4 a.m. or 1 a.m. when you are simply unavailable as a human to get that done. That's the beginning of the functionality of AI type of tools, right? That's the beginning of it. That's why it's meaningful. Because even if you're the best, least emotional trader in the space, and you wake up and you see an opportunity, the reality is the opportunity was maybe 5 to 7% better 4 hours ago while you were sleeping. So you miss it. If you're using our tools, you don't miss it. You simply don't. It's impossible. There's a tremendous amount of parameters and code and development that we've put into it over years and years and years. But at the same time, you're also in control, right? So you work with our team and say, you know what? Over the next 6 months, I want to get this, and this taken care of. Can you guys do that for me? Okay, yeah. Let's use this strategy, this one. Let's set it here, and here. Are you comfortable with that? Here are the outcomes. Here's some back testing. What do you think? Yeah, that looks good. Let's do that. And then you check it once a week. Or you think it's cool because you get an email from us on Friday that says, if you were using our futures and our crypto products, you made anywhere from 27 to 43% in one day. Now listen, that's an anomaly, right? But volatility offers you the opportunity for that anomaly, and that's what we deliver.
So one of the things when people hear about agentic investing that I think I hear over and over and over again is cool. So I'm going to take money, and a hedge fund in the traditional world will take that money and they'll give it over to the high frequency trading algorithms, and they'll go and it'll do a bunch, thousands of trades maybe per hour, and do these kind of very arbitrage driven type strategies. It's a big hedge fund. They're technically doing it with somebody else's money. There's all this regulation, all these things. If I give my money to an AI agent, whether it is in crypto, in the traditional world, in prediction markets, I see people playing around with this stuff. How do I know that the agent doesn't go rogue? How do I know that the agent doesn't do something? Because if it's a rules-based thing, then it just follows, the exact rules. When you start to add in, quote unquote, superhuman intelligence, it's supposed to be smarter than a rules-based system. But, intelligence doesn't work all the time.
Yeah, so good question. First and foremost, I want to make the point that if you give your money to a hedge fund, you have to be an accredited investor to be able to do that. To use our tools in the same way that a hedge fund will, and some of them do, you don't have to be accredited. You can use them with $500 if you want to. And our tools are free if you're using them for $500, $1,000, $10,000. They're free. So that's the first answer to the question. The second answer to the question is, you're not handing money to us. We don't custody anybody's money. It's all held on whatever exchange you're comfortable with. And by the way, it's user-driven. So, you're setting up your setups with us, but it's your setups. If you want to hit the kill switch, everything runs through TradingView to your exchange. You just click a button and it's turned off. So that risk doesn't exist because you're in control.
And when you guys talk to these clients, what are they doing? Are they taking 100% of their assets and they're putting it into kind of algorithmic or agentic type investing? Or are they saying, hey, I'm going to take 10% of my assets and put it there. I've got, 50% in spot Bitcoin or maybe I'm S&P or what. Just talk about kind of asset allocation as people get access to these kind of more high-powered type opportunities.
Well, we have a little more than 17,000 users at Arch Public, and they follow a very, 90% of them follow a very specific kind of evolution. They sign up for our free product. They have a conversation with our team. I want to get my feet wet a little bit. I'm going to use a few bucks to see if it works. Within 3 to 6 weeks, they see it work again and again and again and again. And their mind is usually blown because they'll wake up to trades, right? They'll wake up to trades and they'll see that asset be at a significantly different level, and they'll say, all right, I got to move more money into this. And to do that, then you got to become a part of our concierge program. But that's the evolution that they take is, let me see if this works. Okay, this works. Okay, it really works. I can't do this on my own. I don't want to do this on my own. So now when it comes to my crypto allocation, I'm going to go from 5% to 10% to 50% because I trust what's going on here. And that's the evolution that they take. We see it again and again and again.
When you think about risk, where do you see the risks in using some of this stuff?
So the risks associated with binary outcome algorithmic products are simply bad outcomes associated with trades. What our software does, what our setups do, what our strategies do, you're generally accumulating an asset of some sort. Even when you're arbitraging an asset, you're accumulating that asset while generating cash yield. For us, arbitrage is kind of a cool word to use, but that's what arbitrage is for us. You're still accumulating Bitcoin. We have a specific setup that's our Bitcoin yield algorithm. And over the last 4 years, you've generated more than a 25% CAGR and a 20+% cash yield on an annualized basis. So you still end up with more Bitcoin, but you end up with more cash yield. As to risk, the only risk associated with our crypto algorithms, our Bitcoin algorithms, is that Bitcoin goes down in price. That's it. There is no risk. We never use leverage. You can't use leverage in our systems. You can't short anything in our systems. You are simply using the volatility that avails itself to you to affect performance with your hands completely off the wheel. Yeah.
Where can people go check out more?
Say that again?
Where can people go check out more?
Archpublic.com. The best, coffee cups, Archpublic, the seats, Archpublic.
Are you going to tell everyone about this giveaway?
You know what? I have something to say before we finish this thing out. I was 2 spots behind Bitcoin Dad. Heretofore, I would like to be referred to as Bitcoin Uncle. Okay? All right? Bitcoin Uncle. All right? I think I can pull that off.
Well, you have to go in front of the Senate Banking Committee and
yeah, okay, that's true.
Talk about your nephews and nieces. All right, will you tell everyone about this giveaway that you guys are doing tomorrow?
Yeah,
tomorrow or Thursday?
We are doing a giveaway tomorrow. We have a unique relationship. One of our clients, let's just say his family is very involved in wine and spirits across the globe. Brown-Forman, if you want to look him up. We have a very, very interesting bourbon that we're giving away tomorrow. It's the only bottle of this bourbon available in the United States. It's a Baccarat bourbon that was available for the 150th of the Kentucky Derby. It's a one of one. It's worth a lot of money, and
how much?
I think it's worth about $16,000. No doubt, it's a collector's item. Listen, we worked with Brown-Forman to get access to this piece. Brown-Forman there's only one in the entire United States. You would think they'd have access to a bunch because they're Brown-Forman, but no, there was only one of them in the whole United States, so we got it. And it's a giveaway tomorrow. It's uniquely cool. Also, tomorrow in the VIP space, which everybody here will have access to, will be there. We will have booths with Woodford Reserve, Jack Daniels, Old Forester, and I don't know how to pronounce the Scotch.
Yeah, you're definitely going to be crypto uncle. You bring the alcohol to the party. Of course, everyone's going to love you. Yeah,
that's right. Right? See, I told you. So, enjoy it. It's free to everybody. We want you to have a good time. And
If you ever wanted to be a fan favorite, just bring them out.
Yeah,
All right, thank you very much.
All right.
All right. Next, we've got Rory and Sam are going to come up here. Is Sam here? Where? Oh, you're coming from the other side. Trying to confuse me there. Well, look at everyone getting up. Everyone's rushing over. They're going to go try to shake them down for some alcohol. All right. There's a lot of stuff we got to talk about. Rory, I want to start with you.
Yes, sir.
CleanSpark, I think, is one of these businesses that everyone has heard of. They see you guys on Twitter, and they're trying to understand what is unique about the business compared to other businesses. How do you guys think about, what is the N of one? What is the reason why so many people are attracted to CleanSpark?
Yep, I think that's a great question and very appreciated, and also just appreciative to be here. I think if I had to boil down what makes us unique as an organization, again, it's hard to not go back to cliches, but what I think has been incredibly impressive and clearly true about my time there is that it's about people and it's about culture, it's about rigor, it's about transparency, ethics, and people that are truly mission aligned. It's the most fun place I've ever worked. It's the hardest I've ever worked. I worked on Wall Street for a decade, worked my ass off, worked many late nights, was on the other side of those deal calls when you were on your very late honeymoon. But I've never worked harder at a place. I've never had more fun. I've never done it with better people. And I think that goes all the way down from HQ to site selection and energy development, all the way down to the way that we develop and run our sites, to the techs that are managing the machines.
What's up with Orange? What are you guys doing?
Well, I'll kind of go off for Ori in terms of how we differentiate ourselves from other DATs. Orange is the largest Bitcoin treasury company in Latin America. We're listed in Brazil, B3 Stock Exchange. And we're inherently differentiated because we are in a completely different market than a lot of these other digital asset companies. We have a different regulators, different investor base with different investor behaviors, different tax treatments, and then from there we differentiate with our capital structure and the products that we offer to the market eventually through our operational lines of business. And I think, ProCap similarly, you guys are differentiating yourselves right now. I think we're in this time in the digital asset treasury industry of differentiation of, how are we creating a sustainable business model? And I think over this last couple months and the challenging market conditions, we're seeing the cream separate itself from the crop. And decisions that were made 6 months ago, a year ago, are starting to prove fruitful for organizations who were conservative and also appreciated Bitcoin's vol with their capital structure and their decisions. And so Orange BTC is in a good position today. We have very low leverage ratio, and we're looking to be very active in both our operational lines of business as well as accumulating more Bitcoin on our balance sheet.
Let's talk about managing the treasuries. I think that's probably one of the most interesting parts. It's like there's this whole activity of like, how do you get Bitcoin onto your balance sheet? But then once you have Bitcoin in cash, what do you do with it, right? How do you activate it? How do you drive yield? How do you think about risk? All stuff. Maybe just each of you talk about the philosophy behind that treasury management and what you guys are doing, and maybe even specifically around risk management when Bitcoin is being hyper volatile and there's kind of other considerations.
Yeah, I think at Orange BTC we have about 20% of our Bitcoin treasury earmarked for so-called Bitcoin income generation, Bitcoin yield strategies, Bitcoin activation strategies, whatever you want to call it. And the first thing, it comes down to due diligence. I mean, if we have any kind of counterparties, we're extremely risk averse, and we have a very rigid kind of process of doing due diligence on our partners. And then, Rory and I were talking about earlier, it's about internally building out the internal controls as well as the processes, the trade operations, having the right personnel on your team internally that you can execute on these, whether it's derivative strategies, whether it's different arbitrage strategies that you see, whether market structure inefficiencies, ways to make your Bitcoin productive in a way where you're getting yield, but it's in an extremely risk-averse way. Whether it's the right counterparties, whether it's the right strategies, making sure that you have control over the keys of your Bitcoin, have oversight of what's happening if it's some kind of SMA structure. And so I think it comes down to internal controls, processes, due diligence, making sure that you're taking proper risk management before you even consider any of these yields. 99% of the yield strategies that come our way, which are a lot, it's a no. It's a no for us. And that's how we're going to operate in the future as well.
Yeah, I just couldn't. Sounds good, I mean, I couldn't echo and reflect that more. I think one of the things I'm most proud of with the work that we've done in the digital asset management group is that we went out, over a year ago now. It was kind of, it was December of 2024 and January of 2025, and we did a comprehensive RFP process across the entire street, all the different trading houses, firms, market makers, broker-dealers, et cetera. We took that RFP process from the background of we'd kind of adopted and adapted one that they'd used for an accounting selection, an accounting an audit firm. And so there was a rigor to that I think was very surprising to other people on the street. Look, I'm sure Orange is obviously conducting themselves that way, and there are others, but the feedback that we had gotten from the counterparties that we're dealing with was that this is the most comprehensive and rigorous process that they'd gone through in some time. And so I think that that's where it starts, and quite frankly where it ends is at diligence, rigor, and institutional risk management. I think outside of that, I think it's just it's we were talking upstairs, and this is the part that people don't understand is that everybody wants to talk about where's Bitcoin going? Should I buy or sell? And how do I get yield on it? And those are actually kind of the easy questions, not because it's easy to do, but because that's at the execution stage. The hard part as a publicly traded, SEC registered company is the internal controls. It's getting through audit. It's dealing with accounting treatments. It's keeping your different stakeholders on side and kind of validating your strategy to them. It's getting the board. It's getting management. It's getting internal kind of cross assets to all kind of work together. So that coordination machine is something that is really not appreciated behind the scenes, that I know that from talking with Sam that Orange is doing, and that we are certainly doing at CleanSpark.
When you guys think of these strategies on the yield, you said there's a bunch of these coming at you guys, but you both are mentioning, okay, I want to drive yield, but I want to have no risk or low risk. What are those strategies? Right, like what are the things that people find most interesting? And obviously, don't share anything that you're not supposed to share. But like, are there things that are pretty well understood that you think most of these folks with Bitcoin, whether they're kind of more traditional DATs, whether they're miners, whatever, are going to pursue? And how much of that's going to be done in-house versus using a third-party asset manager? It sounds like you guys are kind of doing a hybrid of both.
Well, we like to keep a lot of things in-house, but that's not to say if we do proper due diligence and there's some firm with expertise that we wouldn't partner with them. But the structure of that partnership is really important. We want to maintain oversight. We want the Bitcoin. We want control over the Bitcoin while we do that. So that's about managing the risk, because we can't lose the principal. We don't want to lose the Bitcoin just for some yield strategy. It's not worth it for us. And so we're thinking long term for that. But when we talk about the personnel that we bring in, the internal controls, it's getting the right people on your team that could ideally execute a lot of these strategies in-house, because we don't want to rely on any other counterparty. We trust ourselves more than we trust some other firm to do it, unless we do a lot of due diligence. So it is a hybrid, but we're at Orange BTC, we're working through due diligence right now. I mean, Rory talked about it. Most of the work happens behind closed doors and communications and doing due diligence and prospecting certain firms. It takes time. It takes a lot of legal work. It takes a lot of how do you structure this? Because in Brazil specifically, I mean, it's important to structure these yield strategies in a way where it's economical for us to do it. I mean, there's no point in doing this risk if we are not structuring it appropriately, and then it eats into the total returns. So it takes a lot of work on the back end that people don't necessarily see. They kind of just see the announcement at the end or the yield at the end. But that's where the real alpha is. That's where the real work is. Yeah.
You betcha. I mean, look, I think the primitives are, there's 5 main ways to generate alpha, right? There's better information, there's better analysis, there's better technology, there's better behavior, and there's better structure. And I think the way that we look at things is that, again, then you get to the primitives of what are you trading. At the end of the day, it's you're either monetizing time, you're monetizing volatility, and you're doing that through some simple, essentially vanilla strategies. Maybe you're putting them together, you're calling it Nyan Condor, but that's all just kind of fancy talk, right? As Talib would say. And so what we're most focused on from a risk management perspective, I'm glad you liked that, Anthony. Thank you.
That was good.
Okay, good.
That was good.
Shout out Talib. I think what we're most
that guy gets no credit on this stuff.
He's redemption arc, potential redemption arc here. Potential redemption arc.
He told me to go back to working in the Starbucks bathroom one time and then blocked me. So he's not. It's a funny joke.
All right, I'm not going to get in between that. But the point being that it's that I could give you our playbook and you can't do anything with it because you don't have our business. And so what you need to figure out is, how do you hedge yourself out on a diligence perspective with your counterparties? How do you hedge yourself out on where you get screwed is in positioning and liquidity, right? It's in counterparty risk and it's in trade structure. And so if we can diligence the counterparties, make sure that we get the positioning right, make sure that we're adaptive to market liquidity conditions, and then we can structure the trades and structure the strategies that we're doing. We don't have to be that fancy. It doesn't have to be that complicated. We're making 600 Bitcoin a month. That means that we're going to sell. We can risk up to about half of that to pay for our OPEX. We can take the other half and risk that to make a little bit of yield. If we get called away on that, great. Bitcoin's up. The HODL's up. The ASIC, the values of ASICs, which are priced in Bitcoin, is up. The growth multiple on the business is up. that's the type of structure that you need to be thoughtful about how you offset that, and why we can act as a ballast in our business to lower the volatility of some of these revenue streams, drive down that cost of capital, and ultimately make the entire business a little bit more attractive as a complement and not as its own kind of outgrowth that's just functioning in its own vertical.
How much does macro environment, Fed policy, all that stuff affect the decisions you guys make?
I mean, not really that much, to be honest with you, because I feel like we know where the end game is, and it's currency debasement, and which is the value proposition of Bitcoin in the first place. So we're going to keep acquiring what we consider the most pristine collateral that will protect ourselves against rising geopolitical uncertainty and currency debasement. You know, you bring up the AI and the risk of deflation. It's not really technology that causes deflationary bust. It's technology coupled with a credit-based system. There's a major credit contraction. And if you see through that credit contraction, my bet is that the government and central bank won't leave that unmanaged, meaning they'll intervene. So Kevin Warsh can come out and say, hey, I want to shrink the balance sheet. Great. Bernanke said that too. So did Yellen. So did Powell. And Powell comes in 2019, there starts to be some concerns about liquidity in the reverse repo market, and he does what every single Fed chair in the past 15 years have done. All right, so the balance sheet expands. So he can talk a strong rhetoric, but when you do the math, when you actually just break down the math of the fiscal situation, you know what's going to happen. And the Fed's balance sheet will expand, no matter how much Warsh doesn't want to do that. And just look at Japan about where the U.S. will go. The BOJ owns 50% of Japanese bonds. The Fed owns like 13 to 15% right now. That number is going up, in my opinion, based on the fiscal situation, which means the currency is going to be the release valve. And so, yes, there might be some tumultuous years where there's a deflationary bust and a lot of chaos, but the printing will come out because they can't let this system completely collapse, especially if there's a lot of unemployment going. People will beg for UBI and other stimulus checks. That Pandora's box has been opened. So at Orange BTC, we're already kind of looking past this stuff and just, okay, they will end up doing this, and this will be global in nature. And we want to own the hardest, most scarce asset in the world, and as much of it as possible. Before this happens, ideally, as soon as possible. That's why it's a gold rush, like Michael Saylor says. So that's how we think about it at Orange BTC from a macro perspective. It's kind of like we're already kind of sitting at the end game, waiting for people to come and realize that is what's going to happen.
Well, it's in a way the deflation actually could create them printing more. Like they will speed up the printing because of the deflationary risk.
Right. The bet is that they will intervene. Right? That's the knee-jerk reaction. That's actually the problem. It's the not allowing the free market to do creative destruction, the feeling that they're saving things and intervening. That's the problem.
You don't feel safe?
Well, they just the banking collapse, in 2023, it showed how quickly they just continued. Oh, we got to go in and save things. Oh, there's a little bit of fire. We got to go save things. That's the problem. That behavior is more prevalent than ever, no matter what Warsh or anybody who comes in as Fed chair says.
What do you think?
Yeah, I'll admit, I think about macro a lot more than I do anything about it. My background is I spent the better part of a decade at a global macro fund called Discovery Capital. That's my grounding, it's my training, it's how I think about the world. And let's be honest, macro is astrology for guys. We just love it, okay? Can't stop thinking about it.
True.
It's kind of true. What I would say is that to me, what we're working to implement is that macro is a slowdown or speed up signal rather than it's a do or don't or a binary yes or no. And we got our director of digital asset management, Jay Bedict, in the audience, who has joined us recently. Is building out a lot of that tooling, research, analytics, and what we're trying to do is just introduce a little bit more. We like to be data driven, not data dependent. We have a thesis and a theory. We've validated that through a couple market cycles now, and what we're trying to do is just be a little bit more thoughtful about signals to know whether we speed up or slow down. For instance, what I would give you as a concrete example of in a significant drawdown like we saw last week. Vols are higher, so we're taking advantage of some of the higher vols, but I'm being a little bit thoughtful about where we're going out into the yield curve. So you're getting this highly backwardated yield curve where basically the near-term vols are much higher than further out. And so we have a mandate, we can go out to X amount of days and we can put X amount of Bitcoin at risk. But what I'm doing is, as a portfolio manager, is thinking about kind of concentrating some of that in some of the nearer term stuff where I'm a little bit more comfortable with the outlook that I have, because I don't want to give away too much upside. If we're pricing in less volatility further out, I don't want to give away more upside in those calls if we're going to go further out and you're not getting paid for it and you could just you could rally back, whereas I'm a little bit more comfortable with some of this near dated stuff and taking advantage of that. So I think macro informs what we do, but it's certainly not meant to drive it. And I think similar to you, it's meant to, we have a structure. We're trying to implement that structure in the world over a series of years or decades, and we're kind of being thoughtful about market, what the market will give us as an opportunity around that, but not be driven by it.
Bitcoin went from 126 down to 60. Didn't feel
what?
But it's much less than we've seen in the past. Do you guys think that was the bottom? Do you think that these bear markets are different? How do you think about the downside, if you will?
Yeah, you answer this one first.
Well, I think picking bottoms is always a tricky business.
That's why you guys are up here. Let's go.
Yeah, no, I think if we do see this situation where we see a stock market correction of 15, 20%, there's no doubt about it. Bitcoin's still viewed broadly as a risk-on asset. It's kind of stuck in this risk-on regime, despite the fact that its monetary properties and value proposition is probably more closely related to a gold, like a safe haven characteristics. But still, it's not, and you can't change how the market's viewing something. And so if we get in that situation where the stocks start to come under pressure, you see precious metals continue to trade downwards, and you have a lot of leverage kind of cross-asset margin, you could see a situation where Bitcoin continues to come under pressure. That's absolutely possible. I think you look at the metrics right now, and given the changing investor base, the more institutional investors involved compared to previous cycle, it's just very different. The regulatory environment, Bitcoin's stronger than it was in 2018. It's stronger than it was in 2022. You can't even doubt that. And so it wouldn't surprise me if the drawdowns are more shallow. And you look at the sentiment now, like fear and greed index at historic all-time lows, like all these factors really kind of paint it like a bottom, like previous ones. And so I wouldn't be surprised if Bitcoin gains some support here, maybe trades around this range for a while. But again, when you look at the structural value proposition of Bitcoin, the structure of the macro environment, the rising risk of currency debasement and geopolitical uncertainty, I think it's only a matter of time before capital starts to flow where it's treated the best, and that's Bitcoin. You can make an argument for gold. I just think Bitcoin's better technology than gold due to its digital nature and fixed supply. And so I think this bottom could be the bottom. I know it's not, but I wouldn't be surprised if it drops. I really wouldn't. But I'm prepared for that mentally. I've lived through that multiple times. But it's not really my base case. I really think that Bitcoin's stronger than it was in the previous bear cycles.
I mean, the answer for our business is that it's not that it doesn't matter, but it's.
Oh, come on! Just give us an answer.
Okay,
bottom or not?
Yeah. Look, here's the deal. I've been wrong. I thought that the bottom I thought that we got the bottom in November. I was very specifically at a dinner, and I kind of put my neck out there, and I said, "Here's what we've seen. We've seen positioning build up around 80 to 85K in puts. We've seen a sovereign wealth demand come in. We've seen kind of this big sell-off, and we haven't seen too much move in the ETFs, and I kind of thought that we were bottom there, and that was true for 2 months, right? And what I think and so I will admit to being a little bit confused by this move. I think that the biggest problem is not is it up or down from here. I think the biggest we all know and sense this, which is that the hyper attention meta of the markets is just not focused on Bitcoin right now. So does it come back because we get the fiscal impulse from OBBB? Does it come back because we get the Clarity Act? Does it come back because, I don't know, Larry Fink gets on TV and he had his Cheerios for breakfast that day? How does it move back around? What I know is that I've been in this space long enough to get my ass kicked enough that I know that eventually it will come back around. You can feel, it's just, you can see it in the trading action. It goes up $1,000, it comes down $1,000. There's just no interest. It's just not really the meta of attention right now. So until you see that happen, I don't really trust too much of the direction. What I do think is true is that I've been through these cycles. We've all been through these cycles. We know that it will come back. We know that the fiscal deficit is not going down, that entitlements are not getting taken care of, that we're not going to run less AI agents, and that we're not going to be more fiscally responsible globally. And so I just think that the setup is the setup, and we continue to build durable businesses through it.
I think that maybe both of you guys are just like see past all the noise, and we know where Bitcoin's going, and it's higher over the long run. Fair?
Yeah. I bought on Friday, or on Thursday, actually.
Why not today?
Let me get off the stage, and then I got to get that arch public and get those tools.
I buy every day.
Oh, you buy every day?
Oh, yeah. But DCA,
Show off.
I've been doing that for, I don't even know how many years.
Maybe one day we'll all be as rich as you and have that much money.
It's not a lot every day. It's something, though.
All right. Thank you guys very much.
Thank you so much.
I buy every day, maybe the line of the entire day. All right, Chris Klein, let's go. You sit wherever you want. This is your show. What am I doing here? All right.
Well, folks, we're an hour away from happy hour, so we can make it. Everybody just take a nice, deep sigh of relief. Are you doing okay? You need water?
I'm doing
you need
great.
Anything?
I got some here.
You've been up here for a while, man.
Are you guys having fun? Yeah. So you guys want to know? You guys want to know the secret? This is VIP day, so maybe I should tell them the secret. Everyone's always like, "Hey, how the hell do you interview all these people?" But what they don't know is, and Chris has been to our office, so he knows. I just sit all day, and I start usually at like 9 o'clock, and I just do 30-minute meetings back to back to back until I go home. And so this is like a break. You know, I got an hour and a half for lunch. Each thing's 20 minutes, not 30. This is like a fucking breeze.
That's true, and you don't have to do the starter to the camera and then the closing. Like, you just get to carry us forward. It's just
yeah, I think people in our office are tired of me just getting on and just, no, I'm not even saying hi anymore. Just like, let's.
I gotta say, you know, you and I have been in this game for a while, and I know it's VIP day, so it's a little different, but I don't think there's a single hoodie in this room.
Ooh.
And I don't know if that's a good thing or a bad thing. I've been thinking about that day. I noticed it in Bitcoin Vegas as well. A lot more the TradFis coming through. And are they here to control us? Or, you know, we're going to pivot a little bit on our conversation about retail right now, which will be interesting. So
yeah. Let's talk about retirement accounts in a deflationary environment. I think everyone knows that I'm very worried about the deflation. But retirement accounts, you can trade around. You don't worry about taxes, and people tend to be a little bit more active sometimes in there. So what do you guys see in terms of maybe how people are positioning themselves right now?
Yeah, you know, you're talking about deflation a lot, and I wholeheartedly agree with you. And I think what's scary is there's that thin line between an inflationary issue and a deflationary issue. And if we're making decisions based upon data 3 or 4 months ago that's not completely accurate, we can get ourselves in a tailwind here, or a downward spiral for sure. What I see with our investors, this is the permanence and the resilience of people building their retirement in crypto, which 10 years ago, everybody thought we were crazy, right? You're putting what into what? This was before I had gray hairs. 10 years in crypto will give you gray hairs for sure. What you see now is it's tax season, so everybody's saying, okay, how can I get my SEP contribution in, my Roth, my traditional contribution in, because the deadline comes, and they're looking at this as, hey, this is like Macy's red tag sale. I'm just getting more and stacking more sats or other cryptos at a discount, and I'm thrilled with that. What I was going to ask you earlier, but you had so many great questions in your opening. One thing I'm thinking about is when, you know, everybody here has lived through at least 8 years of uncertainty amongst government regulation, right? And how they've come in, the government doesn't use ultra thin Sharpies. They use like extra thick Sharpies when they walk into any space they're uncomfortable with. We went through that in the crypto space with AI and agentics and everything that's going on. I'm a politician, which my tag is at Senator Klein, so you know that was one of my intents at one point in my life. Not going to do it anymore. But if I'm in a constituency that is got a lot of Amazon workers or other places, and you're facing $500,000, $600,000, $700,000 people losing their jobs, and at the same time that like you just are making your moves, you told me last night, you probably can only hire 3 or 4 people for a company that would have normally taken hundreds of people in the past. So you've got a really net negative in jobs. When are they going to come in with that big black marker against AI and their regulation? Because we know what it feels like. We went through it for the last 8 years, if not more, uncertainty, and then pretty much banned for life for a while. We got that 86. Our picture was on the window at the bar, says, "Don't let this guy in." When is that going to happen there? And can that even slow down the deflationary stuff?
I don't think that they're going to be able to regulate it, because the difference between, I think, crypto and AI is at the time, the people who held crypto were kind of like, I used to call it, anyone ever seen me talk about the crazy uncle portfolio? You guys heard of this?
Yeah.
All you need moving forward is the crazy uncle portfolio. You need gold, Bitcoin, guns, and land, and you're good. Right.
I tried to do ammunition IRA.
Right, yeah, like that's all you need. Somehow the crazy uncle portfolio is going to do just fine. But if you think about it, that was kind of the thought process around Bitcoin was, like the crazy friend that I have, or like this person on the internet, kind of the hoodie, type person had the Bitcoin. I think the difference with AI is like every single person ChatGPT has 800 million monthly actives. Google's Gemini, even though it's in the search, 750 million. Like there's over 1 billion people using this stuff every single day and is useful. And so it's very hard to regulate something that everyone thinks is useful. I think that's why Uber was successful. It's like people, once they took an Uber, were like, first of all, the VCs were subsidizing it, so you could get across town for like $2. That was awesome. But also it was like I press a button, a car shows up, and I get to take it. This is a much better experience than me standing trying to flag down an Uber or a taxi. And so I think AI is somewhat protected from the consumer experience of like people want it. And it's not like, I have a friend who uses it. It's like I use it on a day-to-day basis. The question becomes, at what point does these two things come together? Right, and I think you guys are trying to think through, as you've introduced some of these products and services around not just holding the assets, but you have other things like staking, et cetera. It's software. Like, should the software be smart or should it be static? I'm sure you guys are kind of thinking through how to do this stuff right now.
Yeah, because you get, especially in the retirement space, we have folks that started back in 2016 and entered with the $170 price point on Bitcoin, and they're still hodling today. Like I said, their resilience is insane. But your new entrants are looking, and even like maybe the ones that came in the 21 run, they're looking for financialization. They're looking for those fun features, limit orders, stop losses, conditionals, staking. We've got 5 coins that are doing that now. Yield, when we have a $12 billion book of business and 60% of it's sitting in Bitcoin, they're all looking for how can I make yield off of my Bitcoin. So that's kind of the buzzword right now. And I think I could probably throw a stone in any direction and find a financial firm in this room that could offer me a yield staking product because everybody sees the writing on the wall. AI, I think, is going to come in nicely with, I think the Crypto Dad talked a lot about it, is obviously you're getting the trading mechanisms, is helping make you a smarter trader. But also businesses are trying to use it to make the experience better for clients. We have an initiative ourselves, my CEO somewhere in the back, and he's gonna be happy I said this, that every department has to have a major AI initiative every quarter this year. And it's part of bonus structure, it's part of incentivization, incentive packages, everything. Because embracing that, like everybody knows, you're not gonna beat it, so you might as well lean into it. But yeah, it's kind of an interesting thing to watch. We're starting to see people that just want to say, hey, how can I get my hands on AI cryptos, and those that are at the forward front of that. And then I always think, I was on a show the other day, was when do we get back to like the hardware AI concept in this? My best way of explaining to like my crazy uncle or a family over the holidays is like someday, right now we can understand some people have smart fridges. I don't have one yet, but I know they're out there. Someday there'll be a day where your smart fridge is like, okay, you're running out of milk, and they're going to order it from an Amazon drone or whoever, and that transaction is going to have to take place somehow. Will it be Bitcoin, or will it be another token that's out there? And will there be a tip involved? Like all those types of, that's the world. And you could think to lawnmowers, automatic lawnmowers that are out there that are checking with weather satellites to say, hey, should I mow the lawn right now? I know we're in New York, you guys don't really mow very many lawns out here, but the rest of America, we have acreage and places we have to cut and avoid the rain and snow.
Well, I do think it's interesting. I'm an investor in this company called Somatic, SOMATIC. And they showed me this demo video, and basically it sits in a janitor's closet at a school, a stadium, an airport, whatever, and it's got this arm, and all of a sudden at 8 p.m. it wakes up, takes the arm, and it reaches over and it unplugs itself from the wall. And I promise you, that's the scariest thing I've ever seen a robot do on a video demo.
At least it's unplugging itself.
Well, it's unplugging itself, but all of a sudden you realize, like, wait a minute, like this thing, and then it goes and opens the door and it goes and it cleans commercial bathrooms. And so it basically, in a commercial bathroom, obviously you can, kind of pressure wash almost, right? You can spray all the soap and dry and all this kind of stuff. So there's like unique things you can do in a commercial bathroom you wouldn't do in a residential bathroom or whatever. But that idea of like unplugging yourself is something that I think is very powerful, but it's very scary to a human. And so when you start thinking about this like deflationary force, one of the aspects that I would love to actually see how many people in here have a group chat with friends or family or whatever. The number one thing that all of my smartest friends are talking about is in 3 to 5 years, when none of us have to work, what are we going to do?
Right?
What is the role of money? How is this going to happen? Like all that kind of stuff. And to be honest, I don't know. 3 to 5 years, is that the right time frame? Maybe.
What's that movie, Idiocracy? Is it that it scares you? We could go that direction, or we could find other ways. Like you mentioned in your opening remarks, this is the last thing we have, but they'll figure it out. There's a lot of very smart people around the world trying to figure out how to give a robot all those touch points. And I think that's the big thing we try to push is this is not our grandfather's economy. So for any grandfathers out there, I'm sorry. You can't just grab GE stock and a couple other stocks and get a dividend. You have to be thinking 20 to 30% of your overall portfolios in a modern mindset. And crazy to think gold and silver have had their tear. And my favorite memes right now are where it's like a young kid saying, with the grandpa saying, hey, how's that crypto doing for you? And he's like, well, your gold got rugged too, old man. Don't forget that. And so we see this shift in, people, we have those assets on there. I think the future is where that segment of alternatives and tokenization really takes us to the next evolution. And we're excited to be leading that front at Bitcoin IRA as we continue to grow. But I think you said it best, is anybody that thinks they're an expert in this room is definitely not. And where we're going to be in 3 to 5 years, it's going to be mind-blowing to be able to go backwards. I think about just where we're at today, sitting in this room 10 years ago, there were guys with hoodies. My daughter was in her terrible 2s, which wasn't that bad. I don't know, you have kids too. But she just celebrated her 12th birthday 2 weeks ago, and she's got her Roth IRA set up with her crypto. And as much as people say, well, it's not as popular with the Gen Zs and the Gen Alphas, all it takes is, remember, there's only 2 things that drive us, fear and greed. So it just takes a little bit of price action, and all of a sudden, everybody will be back saying, oh, what's going on with crypto over there? I mean, how many times have we been dead? I love how you put it. It's like 85% pullbacks over 18 months. Like, we're resilient. We're tough guys. Like, this didn't even scare me. I remember my press guy's here, and he calls me. He's like, are you okay? And I was like, bro, you have known me for a decade, but it's going to have to do a lot more than this for me to get a little bit nervous.
You talked about tokenization. What are you guys doing there? What are you seeing?
Well, I think a lot of people in this room probably see it the same way. You've got these assets that kind of languish. Real estate sits for 10, 15 years, venture capital, private equity, and there's a potential for a beautiful secondary market that can drive capital and liquidity into that. And I think it brings down big barriers too, where traditionally, if you're a commercial real estate guy and you got a building, right across the street from my hotel at the Peninsula, there's a building for 40,000 square feet available. I don't even need to look up the price to know I can't afford it. Maybe you can. But it's up there, and to be able to fractionalize that down, tokenize that, and put that into a liquid market where there's secondary trading, that's going to revolutionize assets that have been sitting kind of languishing for years, and everybody's got them on their books. Even us with 12 billion, we've got real estate and loans and all kinds of things that if somebody's sitting on that for 10 to 15 years and they need liquidity, a tokenization will bring new liquid markets to that in a heartbeat, and really bring down those barriers that allows the average investor. We stacked up the 12 billion $45,000 at a time. We didn't just walk into a room and say, hey, somebody give us $1 billion. It was 10 years of just stacking those things up. And those same folks, this is one of the things I love about Bitcoin, is it really started at the retail level. Even though we're all in suit and ties here now, there's a whole bunch of people that are just waiting for that 150, 160,000, and then another wave of them come in, and they get excited about things that are technological, things that are fast, things that are changing. That's what really drives people. You can see anybody doom scrolls down their IG or their Meta algorithm, you watch a few things for longer than 30 seconds and you get fed it for about 3 days, right?
What are the things that you're worried about and when it comes to these retirement accounts? I think now people are talking about putting private credit, all these different kind of assets into 401ks or retirement accounts. Do you see maybe an area where we shouldn't go, or should we let people put anything they want in that retirement account and give them kind of full access to all investments?
I think Crypto Dad kind of said it. The line gets into, and maybe the line gets into the poly markets and these predictive markets where people are betting on what color tie was Pomp going to wear today, or what color. I think one of the big ones for the Super Bowl was what color Gatorade will get spilled on the winner, and the odds to that. Will we get to that level? And then I stop and think, well, isn't that kind of like the stock market and the crypto market too? It is gambling in itself. Even though we put on a suit and we walk down the street and go into a building on Wall Street, we're all still gambling something at the end of the day. We're betting on up or down, left or right, however it might work. One of the things that scares me is the languishing assets out there that people are forgetting. There are 3 or $2.6 trillion in old 401ks that people are leaving behind and they're forgetting about. And it's not like $1,000 here, $1,000. The average amount is $65,000 that somebody forgot from an old 401k, 403b. You and I have talked about your TSP, and most of those are designed for accumulation. So you put the money in and your company's matching it, and they're matching less and less nowadays. That's kind of driving the retirement crisis. If you leave it in that kind of boring 401k, it gives you generic kind of target date funds, A, B, C, D funds, as I call them. You're never going to keep up with being prepared for what we've gone through with inflation, or being prepared to make pivotal moves in a deflationary era. You really have to put yourself in more empowering type accounts like IRAs, SEP, simples, and traditionals. So that scares me a little bit of how much money's just sitting there, and people are a little bit passive and apathetic about it.
When you think about Bitcoin, you have this thought process that Bitcoin in retirement accounts is actually really important for Bitcoin overall as a network.
Yeah, because I think long-term capital helps drive the maturation of an asset class. And so as we've seen just this last pullback from 126 to 60 in that really crazy week, 2 weeks ago, there were not panic sellers in our world. There weren't people, and I know that there's people that have been through enough of these 18-month cycles have said, oh, well, that's just another day in crypto. But even new entrants, the fear has gone away and the resolve is there. And then they're also thinking, I like to put my riskiest assets in my retirement account because I'm not planning on touching it for 5 years, 10 years. I'm decades out before I'll even utilize these, and perhaps even hand them down to the next generation through inherited Roths and inherited traditional IRAs. And they're also loving that no matter what happens, they're getting that tax advantage. We talk a lot about, you said this morning about, does the government know how to add? Well, they definitely know how to add when it comes to your tax bill. And they used to like to round up. Very few times does the government give us a gift. They taketh. Traditional IRAs in that tax-deferred setting is one of the few times where we actually get that benefit of lowering our tax bill, tax deferment. You can trade all day if you want to, grow an interest in yield and all these financialization tools, and not have to ante up that 15 to 37% to Uncle Sam, which really expands your purchasing power and gets you to a point where you can talk about generational wealth. And so I think that's the exciting part for me. And when you have that resolve, for all of us as Bitcoiners, having 12, and there's others, probably $20-30 million of retirement money sitting in Bitcoin, that gives us a nice little stability. Just like I know there's I don't know if it's a conspiracy theories, but I guess government's buying at 60. I was reading your letter this morning. I don't know if that's true or not, but they've got a lot of entry points there. That helps get us, are we near that bottom where we'll bounce off of that bottom because that capital's sitting there long term?
You guys are rolling out a new brand across a bunch of different things. Are we allowed to talk about that?
Wait, I guess I could, a little bit of a precursor. The future, and this comes to the tokenization element, that 25% I was talking about of alternatives. You've got your stocks, your bonds, your mutual funds. I think tokenized stocks are coming, and some of those other asset classes are. But we've, over the years, have really noticed that the average American is looking for a turnkey solution into alternatives. And if you ever try to buy gold or silver bars with your IRA, or if you ever try to do a real estate investment or BYOD or VC, it gets opening the account, funding the account, butter. Transacting the account and having this easy access of conduits where I want to trade my digital gold for my Bitcoin, and I also want to roll in some tokenized blue chip stocks. Oh, and by the way, I'm going to take a little piece of this tokenized fractionalized real estate. So Retire.com is our new brand that's coming to market here. I think we've already had a phase out, but the big phase that's going to be exciting is going to be coming about the middle of the year. And I think it's going to correspond, I'm a little contrarian here, The last time we had an exciting crypto summer was in 2019, as I recall. And usually it's been a fourth quarter play, some of the first quarter play. I think this is going to be one of those years where we're going to have a little bit of a boringness, maybe range bound for a few months here, and that traditional selling may go away. I don't think it's going to apply to crypto this year. I don't know exactly why, but I think with the deflationary force, a lot of things you talked about this morning, something's going to pop, and then there's going to be some excitement around crypto again across the summer months, which is not traditional.
And when you guys think of that new brand, you basically expand the assets that someone can put into their retirement account.
Yeah, exactly. And be able to capture more into the alternative space that people are looking for. You know, when it comes to alternatives, you have the paper option always. I had a guy that worked with me years ago, and he used to always say, when the the boat's going down, do you want to reach for the life jacket or the life jacket certificate? And that's the essence of having real gold or real Bitcoin versus ETFs, REITs, and those types of things. And there's a power to having the real thing sitting in segregated wallets, segregated depositories, those types of places. And people are yearning for that, but when they open up that doorway, it's like, oh, this is too much work. And they really need that turnkey solution around it.
Now, one of the things that I always go back to is we're talking about retirement. People usually think of that at the end of their life. We now have these Invest America accounts. We've seen Mr. Beast now, getting STEP, but he's going to go towards these Gen Z banking accounts. It seems like there's a ton of work that's being done on the front end of someone's financial life, and we're trying to really go after financial education and financial access. We don't really see that much happening in the retirement space in terms of innovation and education and all that stuff.
It's boring.
Yeah, like what are some of the things that you think are important there?
A couple of people are already yawning because I'm talking about retirements here. I understand. It's your money you're thinking about for 30, 40 years, right?
What are the things that you guys think are really important for people to understand? Let's say you're somewhere between the ages of 25 and 45 right now. Are there certain things that they should be doing that maybe they're not considering?
Should max your contribution every single year. And we're in more of a gig economy than ever before. So most folks have LLC, small businesses, side hustles, those types of things. And you have the ability to use self-employed or SEP IRAs, SEP IRAs, there's multiple ways they call it. There's so many tools out there. There's simples for small businesses. There's solo Ks, indie Ks. They sound really boring, but if you just go down the rabbit hole for a couple of days on YouTube and do a little educational pieces, you're giving your future self will give you a huge pat on the back because you're going to keep that purchasing power by using those tax tools. You hear all the time where somebody they'll buy Bitcoin and they say this is 17 and they sell it at its high, and then they got that Midas touch, so they went and grabbed some altcoin or some meme and thought that it was going to 1000x. That thing tanks, and you've got that capital gains a moment that takes place where you're going to have to ante up 15, 25, 37, even more if you live in California. Try to avoid there if you can. But those tax bills come along, and the meme coin you put those winnings into is now at zero, and you're holding, praying for the next cycle. You can make all those strategies and have that peace of mind that you don't have that giant tax bill coming every year if you use that. So the government just upped it again. I think if you're over 50, it's 8,000, or if you're over 50, it's 8,500. Take advantage of putting that money aside. It also helps psychologically because it's money that there's a penalty for taking out, and you're not going to touch it for a few decades. And start small. Now, I'm not going to sound like Warren Buffett here. It's like all you got to do is compound interest, but that's still there too. Index funds and treasury funds and the 24-hour funds. There's easy ways to capitalize on the rates that they're at now. Obviously, with deflation, I think they're going to have to drop those. They're going to print a whole bunch of money, and that game may be going away. But having it inside of there really gives you that long-term perspective and opens up a world of opportunities that you wouldn't normally think of if you're looking outside the traditional stocks, bonds, mutual funds.
Do you have any views on what your customers have been doing in this recent drop? Are people selling, or?
We've had more net buyers in the last probably 2 or 3 weeks. We've obviously had heavy additional deposits, but that's traditional for this time of year because it's the tax deadline. You have up until April 15th to put in your contribution for last year. So that kind of skews my data a little bit. I think what you're seeing is definitely a pivot towards, this sounds crazy, but more of a pivot towards the security of Bitcoin. Now, I never thought those words would come out of my mouth in one sentence, but some people are we missed that alt season that everybody was anticipating. And so they're wondering, maybe I should just sit in Bitcoin. Where are those gains going to come back when the crypto space overall runs. And I think there's a general enthusiasm, just like the last two panelists. We're all looking past the noise, right? We all know the noise is going to come, and this new Fed chair is awesome, but he's walking in, and there's a lot of baggage from the last 5 or 6 that he's got to deal with. I'm optimistic he's going to do great things. I think we're going to pivot from, I hope, an era of easy money that I've seen my whole life, and you have too, to an era of sustainable growth. But that doesn't, you don't just flip a switch and that works. There's actually going to be some austerity and some pain to get to those points. So I mean, these are hardcore believers. We've got some guys like Rocket Ron, former NASA. He's our 11th client. He actually has a hockey jersey with a number 11 on it that he wears to hockey games. He's so proud of being a part of this that I call them my engine nerds, those early on ones. And interestingly enough, I know that you usually think crypto retirement, Gen Z, Gen Alpha, but 75% of our clients were born before 1976. So this isn't a young man or woman's investment game. Grandma's getting involved in it, grandpa's getting involved in it. And if anybody in financial services watches when somebody dies, usually it's like a fire sale. Just sell everything, give us the cash, and break it apart in the estate, right? We've started to actually have some of our clients pass away because they were in their older years, and the kids are like, Grandpa had Bitcoin? And they're just pumped about it. They're like, how can we add more? How can we put this in an inherited Roth? So the mentality has shifted. I think what the new Fed chair said, if you're under 40, Bitcoin's your gold for your generation. And you can have both in a company. Those, I think you saw some excitement around gold and silver for sure. People were, everybody got really excited about that. I was on the opposite side. I bought ProShares 2X inverse. I was trying to short it, of course, at like 92 and watched it run to 126. And I was like, God, am I really that bad of a trader? And then just forgot about it for a week, and then it was back down to 72. But these are interesting times. They really are. They're times that I don't think you'll see in any economic history book. And you're probably one of the smartest guys I've met, and you don't have the answers. So it's pick choices, make diversification, and find yourself that sweet spot of being able to sleep well at night.
I appreciate it very much. Bitcoin IRA for anyone who's looking for a retirement account.
I'll see you in the studio next week. Buddy.
All right, sounds good. Thank you. All right, now we're going to go over everyone's favorite topic. How the hell do I hold my Bitcoin but get liquidity? Shay's on. Let's go. Why do people borrow against their Bitcoin?
One of the main use cases for borrowing against your Bitcoin on Lava is actually buying a house, which is very interesting. So, when I started Lava originally, I thought a lot of our use case would just be leverage, people borrowing to buy the dip. But what really surprised me is how many of our users, I would say 90+% of our users borrow against their Bitcoin to materially improve their lives. And one thing that was very interesting to me about these users that we have that have Bitcoin is, a lot of them are actually not extremely high income. A lot of them are what you would call like middle income, but they've actually saved their way to generational wealth through Bitcoin. So it's really interesting because, I got into Bitcoin more than a decade ago, and one of the theses of the community was that you could save your way to financial freedom. You wouldn't have to gamble your way to financial freedom. And it's really inspiring to see a lot of our users that have saved their way to wealth and now are borrowing against it to really materially improve their lives. Buying a nice house, for example, is one of the most common use cases we've seen. People use it to basically fund a down payment, or a lot of people have actually used Lava to actually just finance their home purchase because they can't get a traditional mortgage as easily as well.
It's funny you say this. I can't remember if I told the story on the podcast or not, but a couple of weeks ago, my wife and I went to Madison Square Garden for an event. And as we were leaving, I got confused where I was. I couldn't find the escalator to get down. And a usher came over and he said, "Hey, are you looking for the escalator?" So yeah. So he goes, "Okay, come, let's go." And I knew we were in trouble because all of a sudden, as we're walking, he did like a triple take. And I was like, Jesus, so I got like a booger on my nose or something, right? And he was like, "Are you Anthony Pompliano?" And I was like, yeah, I think it's okay to say yes. And he goes, "I just want to thank you." He shakes my hand. And he goes, "I'm a millionaire because of you." So my immediate reaction is like, it's not because of me, it's because of what you did.
Yeah.
I said, "What do you mean?" And he goes, "I have over $1 million worth of Bitcoin."
Yeah.
And I said, "How'd you get over $1 million of Bitcoin? That's a pretty big deal." And I think he thought I didn't believe him. So he pulls out his phone, he opens up the Coinbase app, and he shows me he's got $1.5 million worth of Bitcoin.
Wow.
And I looked at him and I said, "How did you do that?" And he goes, "I've just been saving my money and I've been buying Bitcoin every single time I've had a paycheck for years now."
Yeah.
And he goes, "But I'm really proud of myself that I didn't quit my job." And he said, I make over $100,000 as an usher at MSG,
Yeah.
but I've got this, and I'm still working because I want to get to financial security and build generational wealth for me and my mom.
Wow.
And my wife and I left, and we were just like, dude, in what world is that story possible? And I could probably name tens of people, hundreds of people maybe I've met over the years that has some version of that.
Yeah.
But I think what you're talking about is it's not somebody who is trying to gamble. It's somebody who's looking to save, but they still need the liquidity if they want to buy a house or do something there.
Exactly. Well, I've actually noticed a lot of our users. We had a school bus driver that borrowed more than $1 million, and he's still working though. But he has, generational wealth that he's used to
borrowed $1 million.
Borrowed $1 million.
So has more than $1 million of Bitcoin.
Has at least $2 million in Bitcoin that he pledged as collateral. And I think it's just inspiring. One, he's still working. Two, he's saved his way to financial freedom. And three, he's borrowing to materially improve his life through buying a nicer house, through helping his family. So I think it is a very unique story of Bitcoin, where so far in Bitcoin's history, people have saved their way to financial freedom through Bitcoin, and I think that's going to continue over the next decade.
Let's talk about some of the risks that people run into when borrowing this stuff, right? So you pledge Bitcoin. When you pledge Bitcoin, you then can borrow against it. I think you guys do 50% LTV. Yeah. So if I put down $1 million, I can borrow up to $500K. Mm-hmm. When I do that, I could lose my Bitcoin though.
You could get liquidated.
All right, explain.
So one thing that's important to note. I mean, last week is a really great. Last week there was a
timely topic.
It's a timely topic, right? So I could even just share some of the learnings we had last week. So there's a lot that we do to make sure people manage their risk properly. One is education. Two is if their price of Bitcoin is dropping a lot, we'll send people automatic notifications. We'll actually have a US-based client services team that will directly reach out to people over email or their phone number if we have their phone number to make sure that they can properly add collateral or repay down some of their loan. But last week there was two things that was very interesting to me. One, we have a feature called liquidation protection, which is 24/7. If you have Bitcoin that's not pledged as collateral on Lava, if the price is going to a certain LTV, we can automatically add it. So if you're sleeping, you're on a hike in Spain or something, and you just weren't checking your phone, you just have extra Bitcoin, we can automatically add it to collateral to prevent liquidation. And we actually, last week, because of how steep the drop in Bitcoin was, we actually prevented a lot of people from getting liquidated. And the other thing that was very interesting from last week is we actually saw net new loan volume despite the price of Bitcoin going down, which is very interesting because I think people, what they're doing when they borrow against their Bitcoin, they're delaying the sale of Bitcoin, right? They expect Bitcoin to be higher in the future, so they are making a decision. Either I'm going to sell my Bitcoin and take a taxable cost, a taxable hit, or I'm going to delay it because I'm bullish on the price of Bitcoin. And it is interesting because when Bitcoin price goes down, you probably should actually see more net new volume, and that's what we saw. In fact, we liquidated much less than 1% of our loan book last week. So that also goes to show me that a lot of our users, we've always encouraged them to have much healthier conservative LTVs. The average loan book LTV like a month or two ago was 30%. So we always encourage people to manage risk. Our job is to build the tools that can help them do that, but ultimately it's their decision.
How do you think about what differentiates your platform versus another platform where somebody can go borrow?
I think we have the lowest rates in the industry right now. I think there's two reasons for that. One, we have the lowest cost of capital. Two, we also have other business lines, so we don't have to extract as much revenue from our Bitcoin lending business. I do think that there are a lot of other great Bitcoin loan businesses out there. So I think there's healthy competition. I think there's a lot of growth to be had in this industry, largely around Bitcoin, around stable coins. There's a lot we're doing that is just hyper-focused on building the best product, having the best client services. But I think people should make their decision based on, I think there's a lot of great companies in this space.
Now, when you say lowest cost of capital, how do you have lower cost of capital?
I think we just work with every single credit fund or bank that we can around the world. And that actually is going to I think the cost of capital for us is actually going to go down a lot more even this year, just because, one, regulation changed a lot in the last year. Two, there's a lot more banks and other capital providers that are entering the space. So I think the cost of capital does go down over time, especially over this year.
And then when you think about those other revenue sources, explain kind of how you think, okay, you own the relationship with somebody in terms of borrowing. Mm-hmm. What else can you do to serve them?
Well, people use us to borrow against their Bitcoin. They also use us to buy Bitcoin. But we're also investing in our stablecoin business. So, we have a lot of users right now on Lava that are not really even Bitcoiners. We expect them to be Bitcoiners in the future, but they're people around the world that are converting their local currency into stablecoins on Lava. You can hold stablecoins there. You can earn yield on your dollars on Lava. And really what it is providing people essentially a dollar bank account around the world. And one of the things that I can't speak too much about right now, but we're going to launch in a few weeks, is the Lava card, which one of the biggest concerns or issues we've seen that I think is blocking stablecoin adoption is that you have all these people around the world that are getting paid in stablecoins or getting paid in their local currency, but they don't want to store their value in their local currency. But they can't afford Bitcoin either because of Bitcoin's volatility, so they're converting it to stablecoins. But it's been really hard for them to actually spend those stablecoins. Withdrawing it to their local bank account can be very costly, can also take a lot of time. So, the card will let people spend in real time with no fees, no foreign exchange fees. The merchant doesn't have to accept stablecoins directly. They can just be on, Visa rails. And I think that's going to be something that a lot of our users already asked for. And I think it's going to really also affect stablecoin adoption.
When you think about those international users, how many of them are using stablecoins already versus you guys are the first kind of interaction they've had with crypto? And then how do you think about which stablecoins they can use? Obviously, Tether is kind of the king of the stablecoin world. I think Circle is the, trying to position themselves as kind of the US regulated player. But how do you think about what they can use?
We're pretty agnostic to the stablecoin, like which stablecoin it is. I think all that gets abstracted away. When you use PayPal, you don't know exactly which banks are underlying there. So I think that gets all abstracted away. All of our loans are initially funded in stablecoins, and I think there's a lot of value in that. It's 24/7. You can fund a loan over the weekend. So I think for a lot of people, we're the first times they've interacted with stablecoins, and we built Lava from day one on stablecoin rails. And I think a lot of people are realizing, okay, once I borrow against my Bitcoin on Lava, I see stablecoins. Oh, it's cool. I can just move my money so quickly. I can see where it's at when I'm, sending the money. There's no holdups, no obscure, no unreliability in the payment rail. So I think they're just purely a better payment rail. And a lot of people just want easy ways to spend their balance now. And that's what the card is going to accomplish.
What do you think the big challenges are for you guys moving forward, right? You're a small team that moves quickly, it seems. You're using technology to your advantage. What are the things that you're trying to solve?
We can always benefit from smarter people in our team. We've been growing our team. I think one of the best teams in the industry, and we're growing very quickly. I think all of our business lines are growing very well right now. We're expanding. There's a lot to do. Instead of just being global, there's a lot to do to make the product work globally properly. There's a lot of localization that's involved, and that's something that we're really heavily focusing on. And then our current user base, that if they're in America or they're in another country, we're also wanting to deepen how much we can serve them, right? So there's a lot of products that we're building. The card is one of them, but there's a bunch of other ones to really deepen in a region, and then there's a lot that we're doing to also be better globally.
When you think about building these products internally, one of the topics we've talked about a number of times today is artificial intelligence. Mm-hmm. How much code that is being written at Lava right now is being written by AI versus humans?
Really, almost none of it's being written by AI. So I would say I'm more contrarian on the AI trend. Most of our engineers are very senior as well, but also we do experiment with the coding tools, but I don't think that they're actually that productive for more senior engineers. Maybe for junior engineers, but I also have realized that for the junior engineers I've interviewed, I've actually noticed that they seem a lot lazier because they're replacing their thought with these code generation tools. So we actually are, we're backed by Founders Fund and Costa. Costa is the biggest investor in OpenAI, but I'm actually a lot less.
Do you ban it? Do you not let them use it?
We have some strict policies because of privacy usage, but we do have contracts with, for example, Anthropic to let people experiment with it. But we definitely encourage people to be careful. We do let people experiment with it. We care about privacy, so you can't just use any random tool. But we're very careful about it. And I've actually noticed for a lot of people, it actually makes them worse engineers. So my contrarian take is that they aren't that useful, and they actually maybe decrease productivity today.
How do you think that that's true when everyone else is saying the opposite?
I think this is a very long conversation, but
we got 8 minutes and 45 seconds. Let's go.
I think there's a few things. I think one, that you see all these layoffs, but I actually think that I've interviewed so many engineers at this point. I would say 99% of engineers are not good at their job. So you can actually lay off a bunch of people without changing the productivity. I think probably like 0.1% of engineers that even the best engineering culture like Google are probably effective. So I think you can actually lay off a bunch of people while still keeping productivity, and AI is a great excuse to do that. I actually don't think that, and I actually think like having a really good culture can actually amplify each individual person's productivity. And I think that like being small, having a good culture, having a very positive culture I think there's a lot that we've done to have a very effective culture. But I think that there's a lot of things about code generation that if you're not an engineer, you might think at first glance, oh, this is extremely valuable to me. But a lot of times, I think with coding, you want to be concise and precise. Precise because coding is all about edge cases. And one of the best ways to like actually build a system is like thinking through every single line of code you write, thinking through all the edge cases. And AI is not precise. And concise is, with coding, you really, really want to have very well-readable code because people are going to go in there over time and read that code. You want them to be able to read it properly. And it's not good at that either. And there's really like, we also do things that are quite difficult from a technically speaking. And so it hasn't really been that helpful for us. Maybe if there was like, so you were doing something super basic, you could use it. But, the other day I tried to generate this like basic app, and I probably could have written it in 6 hours. The AI didn't like really help me at all. Just to experiment. So we're constantly experimenting because I think one thing is you don't want to be missing a technology trend. So every week our engineers are trying to see if it's gotten better, but it's not a big part of our culture from an engineering perspective.
What are some of the things that you're using that are new technology? Obviously, you're using Bitcoin, stable coins, things like that. Are there other technologies you guys are using internally at the company?
I think we're like the most bullish on like Bitcoin and stable coins right now. I just think there's so much to do around exploring Bitcoin and stable coins. We're also very interested to see where the tokenization space goes this year. I think it's very early, but we're definitely very interesting. Stable coins are just tokenized dollars, right? So we've already seen so much value in that, in expanding global access to dollars. I think it's actually changes the dollar's supremacy around the world. And so we are interested to see if that affects other capital markets too.
Is there anything that you think people are excited about in the crypto world and you think is a zero or not interesting?
Probably a ton of stuff in the crypto world.
Like?
Overwhelmingly, I think the majority of stuff in the crypto world is not interesting. Yeah.
I agree, but what's an example? What's the thing that you think people are most excited about that you're most convinced is a zero?
Is a zero? I think a lot of crypto is like meme coins. I think that's just gambling. I think they'll always be around, but it's not that interesting to me. I think you could do that anywhere. I think then there's been all these infrastructure technologies like Ethereum and a lot of these other things that I don't think are going to find, or at least are not going to win the most stable coins. We don't even have Ethereum integration. You can deposit, but everything on Lava doesn't settle on Ethereum, right? So I think that there's been a lot of experimentation in crypto that I don't think will find real utility. But I think there's a lot of also just token pump and dumps in crypto as well, right? So.
What about the people that you hire? Where are they coming from? Are they coming from traditional tech? Are they coming from finance? Are they coming from other crypto companies?
So we generally hire people. Definitely, I don't think we've actually hired a single person from crypto. We hired 2 engineers. I would say they're the best engineers I've ever met in the Bitcoin world. And then the large majority of our team is not actually from Bitcoin or crypto. They're from just fintech.
And where do you find them? They're in New York, they're in San Francisco, they're internationally?
Mostly in New York. We leverage our investors. And then, once you hire someone really good, you can just ask them who else is someone that's really good that you've worked with. And that's worked very, very well for us. It's kind of like a graph. You find someone, you really, really trust them, you kind of graph out from there. Mm-hmm. That's my approach to hiring.
Got it. And then do you guys work in person or remotely?
We have a few remote people, but we mostly work in person.
Okay. Is that an intentional thing or just kind of where everyone ended up?
It's pretty intentional. There's certain roles that I think can only really be done in person. There's certain roles that I think are fine to do remote.
All right. There's not really been a very large Bitcoin-only technology company built. For the most part, I think that There are companies, like the Strikes, et cetera, but most of the companies go more the Coinbase route, which is, okay, I got to go to a lot of coins and I go to a lot of products and services. You guys seem to be much more focused in terms of what you're doing. How big do you think a Bitcoin-only business can be compared to the kind of Coinbase, lots of coins, type approach?
I think that it's very easy to make money in finance through gambling. And I think right now what we have is, I call it a quiet gambling epidemic. I think there's a lot of financial strategies that people are trying to sell to people that are really just gambling in disguise. And I think that's like a big meta. I think most financial platforms out there, especially most modern financial platforms out there, are encouraging people to do things that are ultimately going to lead to financial loss for their users. So our focus, I start from the problem. Like I started Lava because I think that personal finance is unnecessarily complex, and that if you are just a normal person, you are thinking about how to do your craft and make money, but managing your finances is extremely complex. And I think that really what I want to see is a world where people are just easily saving their way to financial freedom, that they don't have to gamble, trade, or become a professional investor just to store and grow the value of their money. And so I think that's what you've seen with a lot of crypto and trading and prediction markets and all sorts of other things. I think Bitcoin is a part of that savings solution, but we're really focused on just the savings opportunities. So, like I mentioned, almost every other crypto asset is just it doesn't have, I think, really inherent value. So we're really focused on just the savings vision. And, I think there's two opportunities in finance, being like more for traders or gamblers or for savers. And we're really focused on building for savers.
This is a very in the weeds question, but since you're thinking about saving and users, do you think anyone is ever going to take Stretch, STRC, from Strategy, create a deposit account, and rather than buy treasuries, buy digital credit, and now all of a sudden they're paying 11.25%, and you could say to someone, hey, I've got a deposit account that'll pay you 6, 7, 8%, and they keep the difference?
I think people will probably do that. So one thing we do is, right now, if you're on Lava, you deposit dollars, you can earn a yield backed by treasuries, or you can earn a yield backed by funding Bitcoin-backed loans. But we've seen people choose both options because some people,
What's the yield difference?
There's like 2.5%. So it's like 4 or like 6.5 right now. So I would say we've seen people choose both, because some people just don't want to take the risk of funding Bitcoin-backed loans, though there's never been any losses on that. And we manage our lending platform extremely securely. So I think we already see that there is demand for both of those products. STRC or some of these other digital asset treasury companies, I'm not exactly as familiar as to what this financial instrument does, but I could definitely see giving people optionality is valuable.
But you guys offer 6%, or give or take.
Yeah, and 6.5, yeah.
Yeah, and so when they're doing that, you're taking their deposit, they're opting in, and then you're basically lending it out against the Bitcoin that somebody else is giving you. And so you kind of have both sides. You have the Bitcoin collateral, but you also have the dollar.
Yep. Yeah, we have that. I mean, we've actually seen
now I know where the cost of capital is so low.
Yeah, we have that, and then we have institutional capital too. But we've actually seen a lot of users just decide not to actually just use the treasury product, because a lot of it's interesting because Lava serves these Bitcoin holders, but we also serve these dollar users around the world. So, I think that over time they can, grow into assets like Bitcoin or other assets that are maybe more volatile in the short term. But right now, most of these users just want something super safe, and that's why they go for just earning a yield backed by just treasuries.
My last question is, a lot of people who build technology companies, a lot of engineers. Do you feel like you're on an island because everyone is not as excited about Bitcoin anymore and they're all excited about AI and prediction markets and all this other stuff? Or do you feel like there's still a really core kind of group that's interested in Bitcoin?
I think there's a lot of people that are still interested in Bitcoin. And I actually think right now the overwhelming majority of people are getting exhausted by, like what I was mentioning, like this gambling epidemic. And I think people are realizing personal finance is exceedingly complex. I think people just want a simple way to save, right? So I think Bitcoin really fits that in many ways. And I think that really focusing on the problem, I think the problem that we're trying to solve at Lava has never been more important.
I agree, and I think that it's a national crisis.
Yeah.
Keeps stuffing all this gambling down people's throats, but we'll see. All right, where can we send people to go check out Lava?
Just lava.xyz.
Lava.xyz?
Yeah.
You got one of those URLs.
Yes.
All right, thank you very much. Oh. All right, are we ready with the, where's the mentalist at? Where is he coming back up here? Oh, he's coming for the cocktail hour. Okay, so what do I got to do now? Just say goodbye to everybody? Oh, okay, goodbye. I'll see you guys tomorrow. Thank you guys for coming.
Stay close to me.